Do you think of yourself as the next Parker?
Not at all.
Why?
Because Steve Jobs said you can't live your life trying to be somebody else. So he's one of my biggest influences, and I've never wanted to be a replica of somebody else because a replica is never as good as the original. Bob is a genius, fantastic, one of a kind. We're going to be something completely different, and I have no desire to be some version of somebody else.
Different in what way?
Every decision that I've made at this company is completely anathemic to what Bob did with his company. I want our writers to be partners. All of my senior people are locked into the company. They all have equity or they have a path to equity based on business results. That's something that we never had at Parker. Our benefits are world-class, and everything that we've done at Venice is completely different from that model. When Steve Tanzer, who is the most experienced active wine critic in America, wants to work with us, that says something. When Alessandro Masnaghetti, who's the best cartographer of vineyards, wants to work with us, that says something. When Neil Martin, who's a superstar wine critic with enormous experience in Bordeaux and Burgundy and the former lead critic at The Advocate, wants to come and be part of our team, that says something.
You make it sound like The Wine Advocate was a disaster as a company and a miserable experience as an employee.
No, it was great because I got to work with Bob Parker when he was at his prime, you know, and Bob was like a second father to me, and we talked on the phone all the time, and he gave me great advice.
Can anyone's palate dominate the wine criticism business the way Parker's did? And should anyone's palate dominate it the way his did?
I just think the world is very different today. You know, I mean, it's just a totally different world. It's probably not healthy to have a single person dominating the world.
It's not even wine criticism, it's the wine industry.
Yeah, that's probably not the healthiest thing in the world. But I think that there's just such an opportunity right now with social media and technology to reach such a massive number of people that I think it's possible that one or two people will actually have more influence than Bob Parker did, because they will, again, this goes back to your first question, not trying to be a version of somebody else. You see this in sports all the time. It's like, oh, well, nobody will ever beat this record. And then somebody comes along, you know, it was like tennis, Pete Sampras. Nobody's ever going to win as many Grand Slams. Now you have two guys who are ahead of that and one knocking on the door. And so I think a lot like that.
You're a former investment banker. How does that inform and influence what you're doing and what you've done?
My generation has had to deal with a lot more challenges. That's why I think we're actually much better poised for the future. My first job in finance, the first thing that happened was long-term capital, 1998. Then the tech bubble melted down. Then there was a mutual fund trading scandal. You know, that was all like within about 5 or 6 years. And these are the things that I had to deal with as a young executive. My peers who were 20 years older didn't know how to manage in crisis. They'd only seen Black Monday. They'd just been in a big bull market. It's very different. So I'm very lucky. People of my generation or a little bit younger have actually had to deal with a lot more crises. I think that's actually good for learning how to cope with challenges in business.
From the outside, it kind of looks like you're trying to demolish the house that Parker built, right? You left The Wine Advocate.
Yeah.
You merged with one of his chief rivals.
Yeah.
And you just hired his successor, Neil Martin.
Mm-hmm.
So are you?
I think what that says is that all the best people want to work at our company, and that's really what we strive to create starting in 2013. We wanted to create a world-class company that would attract the best-in-class talent, and not just on the content side, on the technology side, on the digital side, our office, and at every level, what we're trying to, we only hire superstars, and we're looking for those superstars.
the world of professional wrestling, there's something called a swerve.
Hulk Hogan has betrayed WCW!
Some examples. These tag team partners are called baby faces, or the good guys. Then one of them swerves when he super kicks his tag team partner in the head, quickly assuming the role of the bad guy, or what the wrestling world calls the heel.
Are you kidding? What a despicable act that was!
Or a match is almost lost when, what's that? The superstar wrestler appears out of nowhere sprinting down the aisle to save the match.
That's the Warriors music! It's the Ultimate Warrior!
That's a swerve. So it should go as no surprise that World Wrestling Entertainment, known as the WWE, the most popular brand of sports entertainment in the world, is prepared for any swerves that come their way. So here's the story of how the WWE learned to see the swerve coming. So I spoke to Bloomberg reporters Felix Gillette
I'm a writer for Bloomberg News for the global business team.
and Kim Basine
And I'm the U.S. luxury reporter at Bloomberg.
to find out exactly how the WWE is positioning itself for an all-out global invasion, which starts with a massive change to their lucrative pay-per-view model.
WWE basically pioneered the pay-per-view model on cable. I remember as a kid, when the pay-per-view events came up, all of our friends would scramble around and try and get one of the parents to pay for it.
But in 2014, they took a huge risk.
They saw a little bit sooner than some of the other entertainment brands that where this whole thing was moving was away from cable and satellite television and towards on-demand streaming video apps. They made this risky decision, in essence, cannibalizing that pay-per-view model, which they had essentially built.
And after some early turbulence, it's working. Roughly 1.5 million people are paying $9.99 a month for the WWE app, making it the 5th most popular streaming OTT service. This adapt-or-die approach is in the WWE's DNA. Over the past 30 years, the company always seems to think 2 steps ahead. In the early 90s,
WWE was at its most threatened when Ted Turner took them on with WCW.
which stands for World Championship Wrestling. And back then, the WCW was winning the ratings war. So in order to compete with them,
WWE had changed its product from a family-friendly kind of cartoonish style to this really raw. That's why they called their show Raw. It was this raw style of wrestling.
with violent, outrageous, reality-inspired plot lines and aggressive personas.
From a 16-foot ladder!
And they won that fight against Ted Turner. And they bought WCW.
The early 2000s ushered in an era of testosterone-driven programming aimed at the red-blooded American male.
Bra and panties matches, and people smash each other over their head with like barbed wire bats and things like that.
Until 2015, when WWE fans started a hashtag Give Divas a Chance. Since then, WWE has hired 40 more female wrestlers, and that growing cast of female characters was part of a much larger plan.
They started to try to appeal to a broader set of people.
Let's attract more female fans. And after we've attracted more female fans, let's attract more international fans. They're broadening their base, and they're doing that in large part to make it more advertising friendly.
And not just friendly to advertisers.
They're trying to build up their fan base in China. They're trying to build up their fan base in Europe. They, already have a pretty good fan base in India.
India is a place where they already have an established wrestling culture.
Because of the gigantic Indian wrestler, the Great Khali. But there's still a lot of work to do. While the WWE set a revenue record in 2017, only 30% of it is coming from an overseas audience. And there's one person whose responsibility is to grow that number.
The buck eventually stops at Vince McMahon, no matter what's happening within WWE.
Yeah, he's a very controlling guy, and it's a very, very, very tightly scripted company.
And that goes all the way down the board to big stars' entrance music and their outfits and things like that.
So with a CEO like McMahon always planning 2 moves ahead and an aggressive push into multiple international markets, a big issue is money.
It's hard to do all those things simultaneously without committing a huge amount of capital to it.
And that's where the WWE becomes an attractive company for buyers.
Potentially, one thing that could happen with WWE is they could benefit by being acquired by a bigger technology or telecom company, an Amazon or Facebook Microsoft or a 21st Century Fox.
So with a market cap of $2.8 billion, the advantage of owning 100% of their own content, and a rapid consolidation spreading throughout the entertainment industry, it looks like the WWE is well positioned, even if there are swerves ahead.
Our world is changing. Every day, it changes a little faster. Some changes are too small to see. Others, too big to handle. Sometimes, change feels slow. So slow, we don't even notice. Other times, it happens all at once, and we can't keep up. For our climate, change means many things. And between too small to see and too big to handle, there is a whole world of difference. The clock is ticking. This is Bloomberg Green.
Saving the seas. This week, the deep-sea diver who stopped writing the ocean's obituary to find a solution. Enric Sala tells us why the next 10 years matter most. And globalization needs to get greener. Shipping accounts for nearly an eighth of all transport emissions. How can the industry clean up its act? Plus, protecting coastlines comes at a huge environmental cost. But one Israeli startup found a way to keep the sea out and the animals in. From London, I'm Anne-Marie Hordern, and this is Bloomberg Green. After more than a decade of studying the ocean as an academic, Enric Sala realized he was writing the ocean's obituary. He quit his job and became a full-time conservationist. As an in-house explorer for National Geographic, he's clocked more than 5,000 open water dives. He's also founded Pristine Seas, a project that combines exploration, research, and media to lobby countries to protect their oceans. To date, it has helped create marine reserves equivalent to half the size of Canada. I spoke to him about his mission and why it's so urgent.
The state of the world's oceans is really bad. We have lost 90% of the large fish in the ocean. Sharks, groupers, cod, tuna. More than half of the fish stocks are overfished, which means that we are taking them out of the water faster than they can reproduce. More than half of the ocean is affected by industrial fishing, and global warming is killing coral reefs all around the world. The ocean is in a trajectory of decline.
Can you just visualize for our viewers who never get to see the kind of things you are able to see, what an ocean and healthy ecosystem looks like versus one that's next to a bustling economic and industrialized area?
Coral reefs in the United States, in the Florida Keys, are down to only 2% of what they used to be. Before, 80 to 90% of the bottom on a coral reef in the Caribbean was covered by live coral. Now, Florida Keys have only 2%. The average in the Caribbean is about 5% of the bottom covered by live coral. The rest is covered by slime and seaweed. And most of the fish you can see are this big. And it is very, very rare that if you jump into any place in the Caribbean at random, you see a shark. It's very, very rare. Now, let's go to Millennium Atoll, for example. An atoll that is uninhabited and fished south of the equator in the Central Pacific, belongs to the Republic of Kiribati. 2009, we conducted the first underwater expedition to this island, and I still remember the first time. Jumped over the side of the boat, and as soon as the bubbles cleared, I was surrounded by 15 gray reef sharks. After a couple minutes, the sharks decided that we were boring, and they went back to do their thing. And you look down, 90% of the seafloor is covered by thriving coral, and it's full of fish, and a sea turtle comes by. Now, this abundance that we rarely see anywhere except in well-managed marine reserves. This is what the ocean used to be like, and this is what we have learned from going to these pristine places.
And you write in your book that you're writing the obituary of ocean life. What's the cure?
The cure is doing less harm. Basically, there are three things that we are doing to the ocean. One is we are taking fish out of the water faster than they can reproduce. Two, we are turning the ocean warmer and more acidic because of man-made climate change. And three, we are throwing in everything that we don't want, our waste and our plastic. We need basically to reverse these trends.
Does this mean that a lot of this falls to governments and their policies?
That's a big part of it, because it is governments that regulate fishing and mineral extraction and oil extraction. It these governments that have the legal authority to create large marine reserves in the ocean. But also, local communities have an important role to play because some of the most successful protected areas in the ocean are community-led and community-managed marine reserves. So when the fish come back, the divers come in. And that creates huge economic opportunities through ecotourism. These areas that are managed by communities are very successful because the communities have a vested interest in having as many fish as possible inside them so they can enjoy the benefits.
What from the pandemic has changed your view when it comes to protection of the environment?
Nature has given us a very strong signal of how fast it can recover if we just give it space. Everybody was fascinated by all these videos of the whales and the dolphins coming into marinas and mountain lions on the streets of Santiago in Chile, wild goats in the UK. Nature has this extraordinary ability to bounce back if we just give it space. This is why we need to protect at least 30% of the planet by 2030.
How do healthy marine ecosystems help in the fight against climate change, though?
Most people see the ocean as a victim of climate change, but the ocean can also be a solution because we know that the more life that is in the ocean, like big fish and big whales, the more these organisms help to make the ocean productive and absorb more CO2. The kelp forest, seagrass beds, all of these are important ecosystems in the ocean that are similar to the forests on the land that capture a lot of our carbon pollutions.
What are you most excited about in your field?
We have 10 years to fix this problem. Global fisheries catch is going down, stocks are collapsing. Business as usual means that by 2050, 90% of the coral reefs are gone, that most commercial fisheries have collapsed. That affects food security, that affects migration of people. We have 10 years to get to peak greenhouse gas emissions and then go carbon neutral by 2050. And we have 10 years to protect at least 30% of the ocean so we can restore much of this health and productivity, not just for saving biodiversity, but also saving our life support system. We are not talking about something that is apart from us. We are not apart from nature. We are a part of nature. So these 10 years are probably the most critical in the history of humanity.
The most accurate measurements of changing oceans will come from space. While Enric Sala explores what lies beneath, a new satellite is giving us data from above.
We'll learn more about our oceans and climate change, but from space. A new satellite's been launched from California. Its mission, track the accelerating rise of sea levels.
Well, the main instruments on board include a dual-frequency radar altimeter. And this is the primary instrument of the mission, and that's the one that's measuring sea surface height, significant wave height, and wind speed over the ocean. And from those measurements, we can actually have the superb measurements that we expect of sea level rise.
Data gathered from Sentinel-6 will be used alongside information from other satellites to build as complete a picture of the oceans as possible.
With a long record, we can precisely measure the acceleration. We eventually can detect new regime, tipping points. For example, if there is a runaway in the melting of Greenland or Antarctica, sea level will record this runaway change because it is an integrator of all changes that are occurring in the climate system. So we will be able to see some change, big change in the global climate.
The National Oceanic and Atmospheric Administration expects that sea level rise will increasingly threaten U.S. coastlines. One example, the southern tip of Manhattan is expected to flood 20 to 40 times a year by 2030.
11 of the 15 largest megacities are located at the coast, and this number will double. The number of people living in coastal area will double by 2060. So, knowing how much sea level is rising at the coast and how much it will rise in the future in coastal areas is as obvious. It's obviously a major goal for human beings.
Coming up, from sails to steam to oil, the shipping industry is no stranger to change. But how will it navigate the next transition? This is Bloomberg Green. From Bloomberg's European headquarters in London, I'm Anne-Marie Hordern. This is Bloomberg Green. Now, for your roundup of this week's latest climate news, Jennifer Zabazaja has your green in brief.
Here's the climate news you need to know. Deforestation of the world's largest rainforest has hit a 12-year high. More than 4,000 square miles of the Amazon rainforest was destroyed in 2020. That's a 9.5% increase from a year earlier. Government data shows that destruction has soared since President Jair Bolsonaro took office and weakened environmental enforcement. The Amazon is home to millions of species and plants and is critical in the fight against climate change. Bitcoin is hitting all-time highs, but at what cost to the environment? The cryptocurrency is energy intensive, and there are concerns if it becomes mainstream. According to MIT, back in 2018, Bitcoin's carbon footprint was almost as big as Portugal's. Want to get better at tackling climate change? We'll hire more women. That's according to Bloomberg New Energy Finance. Firms with 30% or more women in top jobs tend to perform better when it comes to the environment and are more likely to set clear climate goals. Shopping online is more popular than ever now, but the price of convenience is measured in CO2, and more deliveries means more fuel burned and more packaging wasted. So what can companies do? Well, many are becoming more efficient and sourcing more clean energy for their data centers and warehouses. And England's farmers will be paid to go green after Brexit. As European subsidies are phased out, they'll get new money to encourage them to produce healthy, sustainable food. Poor farming practices are one of the leading drivers of water pollution and the loss of biodiversity. I'm Jennifer Zabazaja in New York. Anne-Marie, back to you.
The shipping industry is more than just the grease on the wheels of globalization. It's its chief enabler. 11 billion tons of goods are transported by ship each year, the biggest contributors being 2 billion tons of oil, 1 billion tons of iron ore, and 350 million tons of grain. According to the International Chamber of Shipping, 80% of Europe's imports and exports happen over the seas. And for such a vast industry, it also contributes its fair share of emissions. Shipping makes up 12% of global transport energy consumption. So how does it clean up its act? Earlier, I caught up with Bloomberg Green reporter Laura Milan about just how big of a challenge this is going to be for the industry.
One of the main issues is size. So about 90% of the world's cargo is moved by ships. So obviously changing such a huge industry is not going to be fast, and it's not going to be easy. The second issue has to do with technology. So ships obviously travel for many days at sea. It's not as easy for them to refuel as it would be for a car, for example, going on a road. And the sector still hasn't found a technology that's economically viable and that's zero emissions, and equivalent to the electric batteries for cars, for example.
But actions are being put in place to make the industry a bit more environmentally friendly. Walk us through those steps that they're taking.
That's it. So there's a first step that would involve using low emission fuels or biofuels that would significantly reduce the existing emissions. And then at regulatory level, when it comes to the policy and the governments, there are steps being made as well. I would say that the most significant ones come from the European Union, which started to track emissions a few years ago and is now looking to include shipping emissions in the emissions trading system. So that would significantly reduce and help calculate the emissions from the shipping industry. Now, China is taking similar steps. So at the moment, regions need to report shipping emissions to the central government. And finally, we have the International Maritime Organization with a pledge to reduce shipping emissions by 50% in 2050. Now, we must say that that pledge has been considered insufficient by environmental groups, but at least some steps are being taken.
So to get to 2050, the industry obviously is going to need to start tapping some new technologies. What new technologies are you seeing being introduced into the shipping industry?
So we have seen pilot technologies being developed for years now, but what's interesting about this current moment is that we're seeing big players invest in these technologies that are not yet economically viable, but that one day might be. So for example, we are seeing earlier this year, the world's largest agricultural commodities trader, Cargill, saying they will invest in attaching sails to their ships so they can make any technology that they run their ships on more efficient. Similarly, we have seen a spin-off of Airbus, the aeronautics company, developing a similar application with kites. We have been following also developments in hydrogen. So at the moment, hydrogen fuel seems like a good option, a possible option when it has been developed and when it becomes economically viable. And we have Vestas, for example, the world's largest turbine maker, developing some ships that will be able to run on hydrogen in the near future.
Coming up, rising sea levels means humans need to get creative when it comes to coastal defenses. But how do we protect both ourselves and the environment? One Israeli startup may have the answer. That's coming up next. This is Bloomberg Green. In London, I'm Anne-Marie Hordern. This is Bloomberg Green. After water, what's the resource that humans use the most? It's concrete, 3 tons a year for every person on the planet. And engineers estimate it's used twice as much as all other building materials combined. And it comes with a huge environmental cost. Concrete, not just in cities, it's a common feature on our coastlines too. And that's taking a toll on biodiversity. But one Israeli startup has found a way of making sea defenses stronger and encouraging life to thrive.
If you take a look at concrete structures like breakwaters or seawalls, the water around them is often clear. That's not actually a good thing, because it means there's no life. Marine species are actually most abundant in coastal areas, but it's also where us humans prefer to live too. So when we build here, we drive away marine life.
The concrete in the marine world has a lot of additives, a lot of chemicals, and some of those materials are actually leaching out, and they're actually prohibiting marine life to thrive. If we keep developing without any regards to natural communities, there is a tilting point from which beyond we cannot really go back.
In the coastal city of Tel Aviv, an Israeli startup wants to revolutionize our urban coastlines. Their sea defenses are transforming lifeless man-made structures into teeming ecosystems. They do this by replacing standard concrete with their own special cement formulas.
As opposed to regular cement-based concrete, e-concrete includes certain elements that enhance the growth of marine flora and fauna of plants and animals. Our admix, which is kind of our secret sauce, is basically kind of sealing the concrete, making it less aggressive for the marine environment. That once we add it, we enable life to flourish.
In the lab, the team run tests to identify what mixes will work best for marine life.
So we take really ice cube sized concrete slabs of different compositions, and we put larvae, 20, 30, 50. We need to have a lot of replicates. We're geeky scientists, so we have to have a lot of replication and controls. And then within a few days or just a few weeks, we can get an answer on their preference. So obviously if they die, they have a very low tolerance to that specific concrete mix design. And if they thrive or they flourish, we can quantify that very quickly.
E-concrete says it typically sees double the biodiversity of regular grey concrete. From fish and sea caterpillars on their armour blocks to crabs on these tidal pools that sit on the shoreline.
This unit holds water during the low tide, so it's always moist, and therefore it has a very comfortable habitat for crabs and sea anemones and sea stars, etc. These pools have been here for less than 3 months, and this is already what you can see. It's covered with life. See the rock around it, which has been here for probably 10, 20, maybe even more years, only has a thin layer of green algae, and that's it.
As well as the composition of the cement mix, E-concrete designs its products specifically to the marine environment it will be deployed, to create niches for endangered species, or to develop nurseries like these oyster beds. The final part of the equation is creating complex surface textures to mimic natural rock or coral, an environment that helps anchor young organisms.
When concrete elements are being cast, the typical goal is to have a very slick surface, very, very smooth. The idea is to get the water to flow right across it. When we're designing e-concrete with a rough surface, we want to do the complete opposite. We want to slow the water when they are crossing the structure so that the larvae can actually adhere and attach to the surface.
E-concrete has to offer its clients more than just ecological credentials. Over time, they've discovered that creating hospitable habitats for marine life adds another advantage, one that is surely hard to ignore.
We've seen evidence to the fact that the growth of the organisms on the concrete create kind of a layer of defense. Just the addition of weight, we can actually gain stability and strength over time.
This is let's say the unit when we put it in the water. And this is after a year in the water. And what you can see here is all the oysters are completely covering it. We designed the units so they can withstand the forces and perform in terms of structural performance, but they can also be a backbone for ecological enhancement.
The company tests its miniature designs in tanks full of real seawater, rocks, plants, and animal life from around the world.
What we're looking for is the accumulation of calcium carbonate on the surface of the concrete of different mixes and different designs. This is the process that we call biogenic buildup. So with time, we get a buildup of calcium carbonate that is sourced from marine organisms on the surface of the concrete. And we actually encapsulate the concrete with a natural rock. So when the organism die, in case of a coral, it will die, and then another coral will sit on it, and that's how a reef is growing.
The hope that our man-made structures could become stronger over time also means better economics. The units require less maintenance and could therefore stay in the water for longer. E-concrete, though, is just a few years old, so it needs more time to really quantify the longevity of its products. But the company are certain their products are better for the environment, and not just in terms of improving biodiversity.
We're kind of trying to offset some of that immense carbon footprint of the concrete industry.
Construction is responsible for about 11% of global carbon emissions. By adding a biological crust to their products, e-concrete prevents some CO2 from being released into the atmosphere.
For every kilogram of calcium carbonate being created by those marine organisms, we're offsetting 120 grams of CO2. So think about building a port infrastructure or a city waterfront that is an active carbon sink. I think that's a great advantage of the technology.
That does it for this week, but let's keep the conversation going on Twitter. Follow us at Climate. I'm Anne-Marie Hordern, and this is Bloomberg Green.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
Yes, indeed, everybody. A very good afternoon. Carol Masser at my home in New Jersey. Tim Stenovic back at our Interactive Broker studio in New York City. We are also streaming on YouTube. It is Wednesday, April 7th, 2021. And we are awaiting the minutes from the latest Federal Reserve meeting, which was, of course, on March 16th, 17th, that policy setting meeting. I've got my NI Hot menu up. I've got my Fed Live blog up. And we're waiting to see those headlines.
Yeah, and Kathleen Hayes is standing by right here in our studio. It's a special day, so we're going to get to her in just a minute when those start to move along. But Carol, this is one of those days when I say to myself, hey, our shows are usually really good, but this is a particularly awesome lineup that we have.
We're hearing from Jamie Dimon. We're hearing from Larry Fink. We're hearing from the Carnival CEO, Arnold Donald. We've got some great leaders who are going to put it all into perspective for us. In the meantime, let's get a check on the trading day. Let's check in with Charlie Pellin. Hey, Charlie.
Well, hello there. Happy Wednesday. Great show, as you say, ahead. Let's get right to the numbers. Here's what's going on. We've got the 10-year yield right now, 1.64%. S&P up 3, higher by about 0.1%. The Dow Jones Industrial Average, little change, down 2 points, down less than 0.1%. And we have got the NASDAQ Composite Index moving lower now by 3 points, a drop there of less than 0.1%. Again, that 10-year, 1.64%. Gold is down 0.2%, 17.40 the ounce. And West Texas Intermediate crude up 0.7%. 59.75 a barrel. One headline from the Bloomberg: Fed officials do see, quote, some time before substantial progress. It is a Fed Wednesday. 10-year yield again 1.64%. I'm Charlie Pellet. That's a Bloomberg Business Flash.
All right, Charlie, thank you so much. The focus on the Fed and those Fed minutes brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. All right, everyone, let's set the Business Week agenda. And to do that, we've got Kathleen Hayes, Global Economics and Policy Editor at Bloomberg News, back in our Interactive Brokers studio. Dave Wilson, Stocks Editor at Bloomberg News, on the remote access from New Jersey. Kathleen, let's start with you. Fed officials see some time before substantial progress. We are starting to go through that statement.
Well, of course, let's remind our more nerdy listeners, of course, that the Federal Reserve used to give these minutes to reporters under embargo, but with the pandemic and everything else, you just get them at 2 o'clock, and now our guys in Washington are reading through 16 or 17 pages and finding the headlines. But, first of all, sometime before substantial progress is made, let's finish that thought, on getting inflation at 2% and above and keeping it there, and what they consider full employment. They can never pin it down for us. Maybe someday they will. They also are saying their guidance doesn't need to be recalibrated often. In other words, don't expect much from them right now. I think what's going to be interesting in these minutes is to get more granular and see if we can get a sense of how big this debate is right now, because we know that there were a few people who changed their dots. In other words, they moved their rate hike up from maybe after 2023 to 2023 itself, or maybe even 2022. Rob Kaplan from the Dallas Fed is among those. He is not a voter. Mary Daly, who is a voter this year from the San Francisco Fed, is saying just now at a virtual event, we're not through the pandemic yet, but seeing the light at the end of the tunnel. And of course, the Fed's been making it pretty clear for some time that the pandemic, the virus, is going to determine the course of policy. One more thing interesting here, the headline, health crisis continues to pose considerable risk. So again, we're getting vaccinated, Tim. We're getting the virus, at least steady in many states, and we're even reopening. But they still see that there's risk.
Hey, Dave Wilson, give us briefly any equity market reaction here that you're seeing to these minutes being released.
Well, there hasn't been a whole lot of reaction to this point. I will say, though, that in advance of the release, you saw the S&P 500 move toward its high of the day. We're seeing a bit of strength in those, yes, big tech stocks. We've been talking about them since late last week, and they're popping a bit higher here, especially the likes of Facebook and Amazon.com, who are among the best performers on the day in the S&P 500. So, not really a whole lot of direction for the broader market, but just enough to push stocks higher. And that's, basically what it may take for the S&P 500 to set a record here.
Kathleen, how do you add it all up? We're waiting the president, and we may have to interrupt you to head to his comments that he's going to be making live on the second part of his infrastructure plan, which is the jobs plan. But as you see the stimulus, his efforts with the Fed's efforts, how does the economy seems like it's set up to just be roaring in the second half.
Amen. And I think this is the big question.
I believe there's an amen, sister.
Yeah, there you go, Sister Carol. Sister Massa, that I'm speaking to Fed Bank presidents, a few of them over the next few days, and it seems to me this is a really important question. When you guys created this
Kathleen, we got to jump in. We got to jump in because President Biden making some comments.
Oh, let's go.
Bill, what I refer to as the backbone of America through the American Jobs Plan. It's not a plan that tinkers around the edges. It's a once-in-a-generation investment in America. Unlike anything we've done since we built the interstate highway system and won the space race decades ago. It's the single largest investment in American jobs since World War II. And it's a plan that puts millions of Americans to work to fix what's broken in our country. Tens of thousands of miles of roads and highways, thousands of bridges in desperate need of repair. But it also is a blueprint for infrastructure needed for tomorrow. Not just yesterday, tomorrow. For American jobs, for American competitiveness. Last week, I said that once Congress is back from recess, I'd get to work right away because we have no time to lose. So here we are. Democrats and Republicans will have ideas about what they like and what they don't like about our plan. That's a good thing. That's the American way. That's the way democracy works. Debate is welcome. Compromise is inevitable. Changes are certain. In the next few weeks, the Vice President and I will be meeting with Republicans and Democrats to hear from everyone. And we'll be listening. We'll be open to good ideas and good faith negotiations. But here's what we won't be open to. We will not be open to doing nothing. Inaction simply is not an option. Now, since I announced this plan, I've heard from my Republican friends say that many of them say it's too big. They say, why not focus on traditional infrastructure? Fix what we've already got, the roads and the highways that exist and the bridges. I'm happy to have that debate, but I want to tell you my view. We are America. We don't just fix for today. We build for tomorrow. 200 years ago, trains weren't traditional infrastructure either, until America made a choice to lay down tracks across the country. Highways weren't traditional infrastructure until we allowed ourselves to imagine that roads could connect our nation across state lines. The idea of infrastructure has always evolved to meet the aspirations of the American people and their needs. And it's evolving again today. We need to start seeing infrastructure through its effect on the lives of working people in America. What is the foundation today that they need to carve out their place in the middle class, to make it, to live, to go to work, to raise their families with dignity, to ensure that good jobs will be there for their kids, no matter who they are or what zip code they live in? That's what infrastructure means in the 21st century. It still depends on roads and bridges, ports and airports, rail and mass transit. But it also depends on having reliable, high-speed internet in every home. Because today's high-speed internet is infrastructure. It depends on the electric grid, a grid that won't collapse in a winter storm or be compromised by hackers at home or abroad. It depends on investing in made-in-America goods from every American community, including those that have historically been left out: Black, Latino, Asian American, Native Americans, rural communities. Talk to folks around the country about what really makes up the foundation of a good economy. Ask a teacher or a child care worker if having clean drinking water, non-contaminated drinking water in our schools and our child care centers is part of that foundation. When we know that the lead in our pipes slows a child's development when they drink that water. Ask the entrepreneur whose small business was destroyed by the second 100-year flood in the last 10 years in Iowa. Or wildfires in the West that burned 5 million acres last year, an area roughly the size of the entire state of New Jersey. More fires than ever. Or the devastating damage, seen more frequent and more intense hurricanes and storms on the East and Gulf Coasts. Ask all those farmers and small business owners and homeowners whether investing in clean energy to fight the effects of climate change is part of infrastructure. Ask folks in rural America, where more than 35% of the people lack a reliable high-speed internet, limiting their ability to conduct business or engage in remote learning for their schools. Ask them whether investing in internet access will lead to better jobs in town, new markets for farmers, and better opportunities for their kids. And I'm serious about this. Ask the moms and dads in the sandwich generation, the folks carrying enormous personal and financial strains trying to raise their children and care for their parents, their elderly parents, or members of their families with a disability. Ask them what sort of infrastructure they need to build a little better life, to be able to breathe a little bit. It's expanded services for seniors. It's home care workers who go in and cook their meal, help them get around and live independently in their home, allowing them to stay in their homes, and I might add, saving Medicaid hundreds of millions of dollars in the process. It's better wages and benefits and opportunities for caregivers who are disproportionately women, women of color, and immigrants. Or ask our wounded warriors and military families. To my Republican colleagues in Congress, shouldn't we modernize VA hospitals? Update them? Many of them are more than 50 years old. How about the estimate 450,000 post 9/11 veterans with post-traumatic stress disorder, who when they make that emergency call, or their husband, wife, son, daughter makes that call to the VA hospital, Dad needs help, we have to bring him in. And they hear, you have to wait. We don't have room now. Come back, call me back in 8 days, 10 days, 12 days. Look at the more suicides in the military than people getting shot. Is it really your position, my friends, that our veterans don't deserve the most modern facilities that can catch that cancer diagnosis quicker, with access to better roads, cleaner water, high-speed internet that delivers information faster and more of it? Above all, infrastructure is about meeting the needs of a nation and putting Americans to work and being able to do and get paid for having good jobs. Plumbers and pipe fitters, replacing those literally thousands of miles of dangerous lead pipes. They're still out there. Everybody remembers what happened in Flint. There's hundreds of Flints all across America. All across America. How many of you know when you send your child to school, the fountain they're drinking out of is not fed by a lead pipe? How many of you know the school your child is in still has asbestos in the walls and lacks the ventilation? Is that not infrastructure? Line workers and electricians laying transmission lines for a modern grid, providing over 500,000 charging stations on the highways we are going to build to accommodate electric vehicles so we can own the future. Construction workers and engineers building modern hospitals and homes for American families. Healthcare workers, steel workers, folks who work in the cutting-edge labs. Nearly 90% of the infrastructure jobs created by our American Jobs Plan can be filled by people who don't have a college degree. 75% don't need an associate's degree. As I said last week, this is a blue-collar blueprint for increasing opportunity for the American people. It also includes the biggest investment in non-defense research and development on record. I promise you, it's not part of my speech, but I promise you, you're all going to be reporting over the next 6 to 8 months how China and the rest of the world is racing ahead of us in the investments they have in the future, attempting to own the future, the technology, quantum computing, investing significant amounts of money in dealing with cancer and Alzheimer's. That's the infrastructure of a nation. There's a new book out about how we've fallen behind. America is no longer the leader of the world because we're not investing. It used to be we invested almost 2.7% of our GDP in infrastructure. Now it's about 0.7%. When we were investing it, we were the leader in the world. I don't know why we don't get this. One of a few major economies in the world whose public investment in research and development has declined as a percentage of GDP in the last 25 years. Declined. The United States of America, that led the world. Why does this matter? Investing in research and development helped lead to lithium batteries, LED technology, the internet itself. It helped lead to vaccine breakthroughs that are helping us beat COVID-19, to the Human Genome Project, which has led to breakthroughs in how we understand and fight cancer and other diseases. Government, meaning the taxpayers, funded this research. Government. We stop investing in research, we stop investing in the jobs of the future, and we give up leading the world. When we do invest in research, what we're really doing is raising the bar on what we can imagine. Imagine a world where you and your family can travel coast to coast without a single tank of gas, or in a high-speed train, close to as fast as you can go across the country in a plane. Imagine your children growing up to work in innovation, good-paying jobs in fields that haven't even been invented yet, like the parents of every computer programmer, every graphic designer, every renewable energy worker once did, imagined. We invest today so that these jobs will be here in America tomorrow. So America can lead the world as is historically done. That's why I brought back scientists into the White House. We need to think. Look, do we think the rest of the world is waiting around? We're not going to make those kind of investments the rest of the world is saying. Take a look. Do you think China is waiting around to invest in this digital infrastructure or in research and development? I promise you, they are not waiting. But they're counting on American democracy to be too slow, too limited, and too divided to keep pace. You've heard me say it before. I think this generation can be marked by the competition between democracies and autocracies, because the world is changing so rapidly. The autocrats are betting on democracy not being able to generate the kind of unity needed to make decisions to get in that race. We can't afford to prove them right. We have to show the world. And much more important, we have to show ourselves that democracy works, that we can come together on the big things. This is the United States of America, for God's sake. Of course, building the infrastructure of tomorrow requires major investments today. As I said last week, I'm open to ideas about how to pay for this plan, with one exception. I will not impose any tax increases on people making less than $400,000 a year. If others have ideas out there on how to pay for this investment without violating that rule, they should come forward. There's all kinds of opportunities. Just list all the tax breaks that I find difficult to explain. Wealthy deductions, $360 billion if you cap them, top rate of 39%, which it used to be for years, all the way to the Bush administration, almost $250 billion, corporate minimum tax, and the fossil fuel giveaways of $40 billion, etc. I could go on. But let me tell you what I proposed, how to do it. We're going to raise the corporate tax rate. It was 35% for the longest time, which was too high. Barack and I thought it was too high during our administration. We all agreed 5 years ago that it should come down somewhat. But the previous administration reduced it all the way down to 21%. What I'm proposing is that we meet in the middle, 28%. 28% would still have lower corporate rates than any time between World War II and 2017. It will generate over $1 trillion in taxes over 15 years. New independent study put out last week found that at least 55 of our largest corporations use the various loopholes to pay zero federal income tax in 2020. It's just not fair. It's not fair to the rest of the American taxpayers. We're going to try to put an end to this. Not fleece them. 28%. If you're a mom and dad, a cop, firefighter, police officer, etc., you're paying close to that in your income tax. I've also proposed the global minimum tax, which is being proposed around the world for U.S. corporations at 21%. Let me tell you what that means. It means that companies aren't going to be able to hide their income in places like the Cayman Islands and Bermuda, in tax havens. We're going to also eliminate deductions used by corporations for offshoring jobs and shifting assets overseas. They offshore the jobs, shift the assets overseas, and then don't have to pay taxes on all they make there. And we'll significantly ramp up IRS enforcement against corporations and the super wealthy who either fail to report their income or underreport it. Estimated that would raise tens of billions of dollars. It adds up to more than what I proposed in just 15 years. It's honest, it's fair, it's fiscally responsible. And it pays for what we need and reduces the debt over the long haul. And by the way, I didn't hear any of our friends who are criticizing this plan say that the corporate tax cut, which added $2 trillion of the debt, the Trump tax cut, $1.9 trillion in debt, wasn't paid for. The vast majority of which went to the top 1% of the wage earners. I didn't hear anybody hollering in this recovery, the so-called before I became president, this K-shaped recovery, where billionaires made $300 billion more during this period. Where's the outrage there? I'm not trying to punish anybody, but damn it. Maybe it's because I come from a middle-class neighborhood. I'm sick and tired of ordinary people being fleeced. Let me close by saying this. Whatever partisan divisions there are around other issues, there don't have to be around this one. The divisions of the moment shouldn't stop us from doing the right thing for the future. These aren't Republican bridges, Democratic airports, Republican hospitals, or Democratic power grid. Think of the Transcontinental Railroad, interstate highway system, or the space race. We're one nation, united and connected. As I said last week, I'm going to bring Republicans to the White House and invite them to come. We'll have good faith negotiations, and any Republican who wants to get this done, I invite them. We have to get these things done. We're at an inflection point in American democracy. This is a moment where we prove whether or not democracy can deliver, whether it can lay the foundation for an economy built from the bottom up and the middle out, not trickle-down economics from the very top, whether it can lay a good foundation for good jobs in a 21st century economy. I tell the kids, the young people who work for me, told my kids, when I go on college campuses, they're going to see more change in the next 10 years than we've seen in the last 50 years. We're going to talk about commercial aircraft flying at subsonic speeds, supersonic speeds. Be able to figuratively, if we decided to do it, traverse the world in about an hour, travel 21,000 miles an hour. So much is changing. We have got to lead it. I believe democracy can come through when the American people come together. We saw it in the American Rescue Plan. We're seeing it with the Jobs Plan. The American Rescue Plan, which got so badly criticized, how many of my Republican colleagues you've seen gone on your stations or your newspapers and say, boy, people in my state really like it? Because it would be improper, having asked permission. The number of Republicans and Democrats who were hesitant who called me saying, God, this really works. Overwhelming majority of the American people, Democrats, Republicans, Independents, support infrastructure investments that meets the moment. So I urge the Congress, listen to your constituents, and together we can lay a foundation for an economy that works for everyone and allows America to remain the world leader. When we do that, I believe, as I said last week, that in 50 years from now, when people look back, they'll say, this was the moment together that we won America's future. I really believe that. Thank you all. May God bless you and may God protect our troops. Thank you.
Mr. President, are you willing to go lower than the 28% corporate tax rate?
I'm willing to listen to that. I'm wide open to, but we got to pay for this. We got to pay. There's many other ways we can do it, but I'm willing to negotiate that. I've come forward the best, most rational way, in my view, the fairest way to pay for it. But there are many other ways as well, and I'm open.
Will you have failed on your promise of bipartisanship if you don't get Republicans on board with this plan, your first plan passed along party lines?
Look, what I said was I would try to work with my friends on the other side. There are things we're working on together, some of which we passed and some we will pass. But the last plan, I laid out what was available, what I was suggesting, and how I deal with it. And a bipartisan group came to see me. And then the Republican group came to see me. And they started off at $600 billion, and that was it. If they come forward with a plan that did the bulk of it, it was $1.3 billion or $4, 2 or 3, that allowed me to have pieces of all that was in there, I would have been prepared to compromise. But they didn't. They didn't move an inch. Not an inch. But for example, I am dealing with a bipartisan group that came to see me. Now it's about, 3-4 weeks ago when they came about computer chips and they said, look, we have to have our own supply. We have to work together. We're working on that. Chuck Schumer and I think McConnell are about to introduce a bill along those lines. So I'm prepared to work. I really am. But to automatically say that the only thing that's infrastructure is a highway, a bridge, or whatever, that's just not rational. It really isn't. I think the vast majority of Americans think everything from the sewer pipes to the sewer facilities to the water pipes, I think they're infrastructure. Anyway, thank you all so very much.
What are you going to do?
All right, you've been listening to President Biden talking more about his $2.25 trillion infrastructure plan. This is the jobs component of it. He calls it, Tim, a blue-collar blueprint. He's talking about education. He's talking about jobs. He's talking about infrastructure. I do feel like, though, when you whittle it all down, it's also about our race against China and how to keep the United States competitive versus China. These are the president's words.
Yeah.
But he says when you spend, you also got to pay for it.
Yeah, exactly. And that's certainly his pitch out there, especially to his Republican colleagues and to the American people, that the definition of infrastructure is more than just bridges, tunnels, and roads. It's about broadband infrastructure. It's about power grids. And indeed, while he was speaking, for those people who saw it on YouTube and watched it on YouTube just now, you saw that the background had pictures of bridges and solar panels on a roof, people working on top of energy infrastructure. Like, that is the message he wants to get across to the Republicans in Congress and to the American people.
And having said that, he's open to negotiation, whether it's on the corporate tax rate or other aspects of it. All right, who knows more than this on this subject is Bloomberg News congressional reporter Laura Davis, and she joins us right now on the phone in D.C. Laura, listening as Tim and I were, I don't feel like any of it's really new, Laura, because we've been hearing all of this, but what stands out for you in terms of the president's comments? He was pretty heated and on fire a little bit.
Yeah, Yes, we're really kind of moving beyond the, okay, here's what's in the plan phase to here's how we're going to sell it to the American people. And this is what we've seen really kind of across the board from the administration today. It's particularly looking at these tax increases and saying, look, we know that tax increases may not be like the number one most popular thing, but this is important for us to have money to do the things that, people say they want. Roads, bridges, of course, but also childcare, elder care. Looking at, workforce participation and semiconductors and kind of all of these issues that kind of across the board bipartisan sides agree that there's need for money here. And to do that, we have to raise more money.
What did you make of the question that the president got at the end there, asking if he's willing to negotiate on that 28% corporate tax rate? He said he was willing. He said he'd go lower if he can figure out other ways to pay for this.
Yes, and this is what we've heard from the president, kind of when different issues have come up, the state and local tax deduction being another one that Democrats want to make that tax deduction bigger, which would cost more money. He said, look, I'm willing to wheel and deal, but you guys have to come up with some sort of proposal on where to find this money. And that's what's going to be very difficult, just because the amount of money we're talking about here, multiple trillions of dollars. And Biden has really hit all of the, any low-hanging fruit that was out there, that's already gone. So they're going to either need to go get very creative on, how do we come up with some other fee or tax to pay for this, or, really start looking at ideas that are super controversial, something like the wealth tax that Elizabeth Warren has talked about, or a financial transaction tax, a Wall Street trading tax, both of which are complicated and in some cases unpopular. So that's where the trick comes in for lawmakers who want to get extra goodies in there.
Laura, I feel like this isn't your typical tax and spend kind of plan. This is about thinking about where the U.S. is 5, 10, 15, 20 years from now. It's thinking about investing for the nation's future. I'm not trying to take sides here, but many of our guests have talked about how a country like China, which is quickly picking up on economic momentum and soon to overtake the United States when it comes to global GDP, this is about the United States, continuing to be a competitive country.
Yes, and this is something we've heard,
what was supposed to be an office in an embassy is now Assange's self-imposed prison to this very day. But that doesn't mean he's slowed down. Since being trapped in the embassy, WikiLeaks has released files about Guantanamo Bay prisoners, Syrian political figures, and the draft.
Interesting, too, seeing that it hasn't been universal opposition from companies on these tax increases. We saw Amazon yesterday and today Lyft came out and said that they support them, which shows, that they're seeing some net benefit of having, better roads, a better educated workforce.
Was there anything that you've seen in recent days, Laura, that would give you any indication that Republicans would see some sort of package that they would sign on to?
No, frankly, no.
Wow.
I think that ship has sailed. The Democrats are committed to doing something really big here, and to do that, they need revenue. Revenue means tax increases, and that is just not going to be compatible with where Republicans are.
But you got to pay for this stuff somehow. Infrastructure is popular. Roads and bridges and tunnels and more. I mean, this type of thing is popular among Americans, but it doesn't come without a cost.
That's true, and I think if Democrats and Republicans were to agree to do something small, maybe $300, $400 billion, just focusing on that roads and bridges piece, there's probably some user fees and some money from IRS audits, and they can cobble together that money. But when you look at a couple $1 trillion, there's just no way to do that without tax increases.
Yeah, it's a lot of money. All right, Laura Davison, thank you so much. Bloomberg News congressional reporter Laura Davison on the phone in the nation's capital. Let's get a check on business news, a check on that trading day. We're bouncing around a little bit, down on the Dow, but up on the S&P and NASDAQ. Charlie, take it away.
Indeed, it is a mixed Wednesday. I'm keeping an eye, though, on the shares of the U.S. infrastructure ETF. You heard President Biden talking infrastructure. That ETF down now by 0.6% for the year, though. That ETF, IFRA on the ticker, up by 16%. Mixed Wednesday, indeed, a Fed Wednesday. Stocks rose after the Federal Reserve refrained from signaling any changes to its bond buying program anytime soon. S&P up 5. That's a gain of 0.1%. The Dow is down 12 points now, lower by less than 0.1%. NASDAQ up 13, a gain of 0.1%. 10-year yield 1.65%. We've got gold down $3.59 the ounce, lower by 0.2%. That's $17.39 West Texas Intermediate crude up 0.4%, $59.53 a barrel. Again, recapping, stocks are trading mix. Lower, a little changed on the Dow. S&P on track for a record up 6, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, appreciate that market check. Charlie Pellet there. Well, we are seeing progress and as well as some concerns when it comes to COVID-19 and the vaccine rollout. The nation's top infectious disease doctor heading up the president's COVID team, Dr. Anthony Fauci, he made some comments at the National Press Club yesterday talking about the progress, yes, but still far from being over COVID-19.
It's really a critical time right now because we could just as easily swing up into a surge. That would be a setback for public health, but that would be a psychological setback too.
Again, that was Anthony Fauci, of course, Dr. Anthony Fauci, director of the U.S. National Institute of Allergies and Infectious Diseases. So, Tim, a lot going on. We've got New York City saying beaches will. We've got global cases still above 132 million, 689 million shots given worldwide.
At the same time, we're seeing a lot of news when it comes to vaccines. The United Kingdom rolling out the Moderna vaccine, giving those first shots today, and also news from the European Union about AstraZeneca.
So let's get into it with Dr. Sandro Galea. He's Dean and Professor at Boston University School of Public Health, author of the upcoming book. It'll be out in the fall, The Contagion Next Time. He joins us again on the phone from Boston. The Contagion Next Time. Dr. Galea, that terrifies me. Nice to know. Have you back here.
Yeah, thank you, Carol. Good to talk to you.
So how do you see kind of where we are? I do feel like Dr. Fauci, we also heard from the president yesterday talking about progress, seeing over the weekend a day where we've, rolled out 4 million vaccinations in the United States. And yet there's always those words of caution.
Yeah, I think we've made remarkable progress. 4 million vaccines a day is extraordinary. We've had 150 million shots since President Biden has taken office. That's about 70 days. And in many respects, we're sort of on the brink of an amazing sort of transition, amazing breakthrough. We'll have enough people who are immunized where it will be difficult for the virus to spread. At the same time, there remains the concern about the variants and also the concern that as restrictions ease in parts of the country, particularly Michigan, you are seeing more cases spreading. Now, the cases that are spreading, there's a question about demographically, they're affecting more young people who have less severe disease, as you know, and as we've discussed on the show. So it's a balance of multiple forces, more vaccines, fewer people susceptible, at the same time, easing of restrictions, more young people getting cases. And I think the question on everybody's minds, which you heard in Dr. Fauci's comments, is which of these will we be able to push forward first? Will we be able to get enough people vaccinated so that we are much less susceptible, so that we can really see a dampening in the course of COVID? Or will we have other flare-ups, other clusters that become outbreaks?
What does the pandemic being gone will look like when this turns endemic, right? We do have a flu season every single year where thousands and sometimes tens of thousands of people do die, but we don't call it a pandemic.
That's true. It's in many respects it becomes endemic when we establish a baseline prevalence that we grow comfortable with, and of course what that looks like remains to be seen. But I think most commentators have settled on that if we can get the surges under control, that this will be something that probably will be with us, where we will have some number of cases every year, potentially requiring some boosters responsive to variants annually. But it will be a disease that we live with the same way we live with the flu.
So, tell us what's going on at your university, because I think the last time we talked in February, you were just returning to in-person classes. Tell us kind of where you are and how things are going.
Yeah, so we continue to offer teaching in a combination of in-person and hybrid. Most of our students are online, but about 10 to 20% at any one time are in person. And our faculty and staff come in as needed, depending on the teaching needs and the needs of the scholarship. We have announced, as have many other of our peer universities, that our expectation is that we will be fully back to in-person teaching in the fall, starting in September, that we expect more or less a return to a sort of business as it was before the pandemic in the fall. That will undoubtedly be accompanied with some testing. Whether or not there will be masking, I think that remains to be seen. But the expectation of, at least at our school, our university, and our peers, is that the fall, assuming that other things do not intervene, we will be back to teaching in person.
Is there going to be a requirement for students to be vaccinated?
Yeah, so we have not put the requirement in place yet at our university, but other universities have. Other universities have announced that they will. Northeastern has, Brown University has, Rutgers has, that their students, there will be a requirement. And I think it's an active conversation in all the universities right now.
Do you think it should it should be a requirement from a medical perspective?
I think what matters is that we get as many people vaccinated as possible. Whether getting 90 to 95%, say, of a community vaccinated requires to make vaccination a requirement, or whether it can be achieved voluntarily, I think that depends very much on the particular university community.
Hey, one thing I want to ask you, I'm going to actually talk with Arnold Donald, the CEO of Carnival, and the CDC last night basically came out and said they think that we could see some U.S. cruise ships back in order by midsummer. What do you think about the cruise industry, and what about that maybe reopening and what needs to be done?
Well, I believe it was Viking, right? That they said they will be reopening cruises, but only for people who are vaccinated.
Correct.
And I think when
but the
you're doing
CDC isn't requiring that in the U.S. so far.
No, not so far. No, I mean, I think what you're doing from a business, from the enterprise perspective, let's say from the Viking perspective, you are saying that you are only going to have people, obviously in close quarters, but people who are very low risk for transmission, who have been tested, so you know they don't have COVID, and essentially you create a closed community where there's no COVID in, so there's no COVID inside, so COVID is not going to spread, and people who are at low risk. The key about the vaccines is we know that people who are vaccinated can still get COVID and can still transmit COVID, probably. But the key is that the cases of COVID among people who are vaccinated that have been documented are much milder than they were before COVID. So really, this is part of Putin's question of us learning to live with COVID. Like, what does it mean if there are still cases of COVID, but they're milder, and what's our tolerance for that? And I think all of that's being sorted out right now.
Yeah, milder, and that they don't necessarily do the same damage that they would have done to us if we weren't vaccinated, because we don't get as sick, as the studies have shown. Hey, what about variants? Where do variants come into this conversation? What's the latest that you're seeing with how they're being able to spread more rapidly and also possibly make the vaccines less effective?
Yeah, the answer is yes to both. I think the best data are that the variants make transmission more efficient and also have the vaccines being less effective. Having said that, the leading vaccines out there right now, the best evidence suggests that they remain maybe 50%, maybe 60% effective against some of the variants. The transmission, so the R0, jumps up with the variants. So essentially, they make the virus more dangerous. It makes it more dangerous for us and makes our line of defense vaccine less effective. But we do retain effectiveness of vaccine, which then brings us back to our best approach right now is to vaccinate as many people as possible, to leave the virus as little space as possible to move around.
Your book coming out in the fall, The Contagion Next Time. What should we as global citizens be preparing for?
Well, the central thesis of the book is that we undoubtedly will be spending a lot of time focusing on biosurveillance and vaccines and all that's important, and we should do all that. But a lot of what's been going on in the past year is about our social and economic structures that left us exposed to this vaccine. It's about underlying health inequities that created health haves and health have-nots that the vaccine exploited, that the epidemic exploited. That unless we tend to those underlying issues, the next contagion will end up with the same devastation socially and economically that we saw happening this time. So it really, Carol, builds on a lot of conversations you and I have had over the past year and a half since the pandemic has been around, that we cannot buy our way out of the consequences of a pandemic simply by dealing with vaccines and biosurveillance, that we actually need to tend to the underlying issues, that a large proportion of the population has underlying comorbidities that makes them vulnerable to illness when a pandemic hit, that a large proportion of the population has no choice but to actually go to work physically in person, which then means that we have a hard time controlling transmission when a pandemic hit. So the thesis of the book really is that we need to tend to these things.
So very briefly, I mean, do you see anything policy-wise coming out of Washington that does help deal with these things? We just heard from the president about his $2.25 trillion infrastructure plan. Is there anything in there that would help?
From Washington, I do. I actually think the signals from Washington have been very promising. Of course, ultimately the proof of the pudding is in the eating, and depends on how these things are implemented. But I think what the president is proposing, the infrastructure plan, paying attention particularly to investing in narrowing health gaps, that these are steps that we should be taking. Frankly, we should have taken as a country 30, 40 years ago. So I'm heartened by these signals coming out of Washington.
Right. I mean, water, equality, jobs. I mean,
Exactly. So nice to catch up with you, Sandro. Stay safe. Dr. Sandro Galea, he's Dean and Professor at Boston University School of Public Health. He's author of the upcoming book. It'll be out in the fall, The Contagion Next Time, joining us once again on the phone from Boston. I've said it before, but I love talking why I love talking to him is we get the medical perspective, we get the academic perspective of what's going on in education because it has been so impacted because of the pandemic. So, Tim, great to check in with him.
Yeah, it always is. And Boston University still not decided with what they're going to be doing when it comes to requiring vaccinations.
Yeah, exactly. They expect to be back in the fall with some testing. All right, let's get another check on the world of business and a look at that trading day. Hey, Charlie Pellet.
Well, hello there. We're looking at a mixed day. Continues to trade mixed. S&P at a record. The Dow retreating by 17 now, down by about 0.1%. But the S&P adding 5 points, 4,079, a gain of 0.1%. NASDAQ up 13. That is a gain of 0.1%. 10-year yield 1.65%, while gold is down 0.2%, $17.39 the ounce. And West Texas Intermediate crude up 0.4%, $59.58 a barrel. Instacart and DoorDash plan to launch their own credit cards. The partner, JP Morgan Chase. JP Morgan shares up now by 1.4%. Again, recapping, S&P 500 index up 6, a gain of about 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So in the upcoming issue of Bloomberg Business Week magazine, and it turns out it's also a most read story on the Bloomberg today, it's about millions tumbling out of the global middle class in a historic setback. Not a good thing, Tim.
No, I got to turn my mic on there. Not a good thing at all. And, you know, we were lucky enough to speak to Sean Donnan, senior trade and globalization reporter at Bloomberg News, a little earlier in the day on Quick Take to talk all about what has changed over the last year because of the pandemic. So, Sean, come on in here. You're joining us on the phone from Maryland. Talk to us a little bit about what happened in 2020 during the pandemic with regard to the middle class and why it was such a big deal that so many people fell out of the middle class.
Well, thanks for having me again. Look, what we've seen in the past year with the pandemic is really the upending of all sorts of economic truths, right? And the end and the challenging of big ideas. And this is one that's kind of gone by unnoticed. For 30, 40 years, businesses around the world have been betting on this big, growing, new middle class and emerging economies, and it's been ever growing. There's been this escalator to the middle class that's just kept churning out new middle class people in places like India and Indonesia and the Philippines and obviously China as well. Well, what we saw with the pandemic and the economic crisis that came with it was for the first time in decades, these economies, a lot of these economies were contracting. And when they contracted, what also contracted? The number of people in that middle class. And the big question that we've got now is this just a blip? Is this a one-time thing? Or as these economies, and we've heard this from the IMF this week, recover more slowly than advanced economies like the U.S., is it going to be harder to get those people back into the middle class? And is that going to be a bigger drag on growth? And is that going to really change or force a change in thinking by a lot of business executives, CEOs around the world who've been betting on all of these consumers in new and exciting places?
Yeah, it's such a great perspective. Joel Weber, Bloomberg Business Week editor on the Access Line in Brooklyn. I can just see, Joel, when Sean was talking to you about this idea, like, oh yeah, I'm in.
Yeah, and you know, I think the thing that really distinguishes it was the ability of the newsroom to make this a truly international story. It's like, you know, I think we've talked about the China middle class for basically almost every story about Chinese consumers for a decade plus now. But you know, it's much bigger than that. The global middle class is not the American middle class, right? And these are people who have actually risen out of poverty around the world. And I think the scary part, as this package shows, is you know, the grip of gravity, I guess, really. And when we have this much wealth spread across the world and this many people that are being sucked back toward poverty, it's going to become another economic challenge for not just like the next year or two, but potentially for years to come. It makes stories like vaccines all the more relevant because the developing world remains well behind the developed on that front. So all of those were really interesting to me. And Shauna, being a guiding hand in all of this, take us through some of the countries and what jumped out to you and what you learned.
Yeah, so look, I mean, one of the really important things with this story, and I think with any economic story, is really to hit at who's affected. And so we went out and we spent time talking to reporters in our bureaus, and we found we really ended up focusing on 4 countries. And in India, we talked to a guy called Ravi Sharma, and Ravi is a really interesting guy, father of 2 beautiful daughters. He's been married, and last year he was hoping for his wedding anniversary to give his wife their first car. And the car in particular that he'd been saving up for years is a $6,000 car. It's called the Maruti Alto, and it's really the entry-level car for the American middle class. I'm trying to think of an American equivalent. It's probably the Toyota Corolla or a Ford Fusion. Then we went out over to Thailand, and Thailand's an amazing story in that it's really about us and how we're not traveling internationally, and we're not going to these places that depend on tourists. And in Thailand this year, they expect to have 3 million visitors. In 2019, before the pandemic, they had 39 million visitors. And we talked to this woman, Yada, who's a street hawker there, sells snacks and fruit juice to tourists. And those tourists that she relies on, and she used to have a house and a mortgage and a car with a car payment, that income is just gone, and she's defaulted on both of those and moved into a rental house. And a very kind of something that I think a lot of people in the American middle class can feel for. Then we went to South Africa. In South Africa, a young woman who has moved into her first apartment and lost her job last year with a big retailer that was getting close to bankruptcy. She moved back to the family home. But the important thing here is she's moved from this kind of steady job in the formal economy with an apartment in the formal economy to like this portfolio of side hustles. And one of the biggest ones is she's built a room out back of the family home that she can rent out for $100 a month. And then finally, we go to Brazil and to this woman, Francinette. And Francinette is a secretary. She has a comfortable middle-class existence like a lot of Brazilians. She loves beef, but you know what? The price of food has changed so much in the past year, and they've got a real problem with food price inflation there in Brazil that she's now, they've turned meatless Mondays into meatless Tuesdays, and they're also, when she goes to the butcher, she's looking at things like kidney and liver, the kind of thing that we think of as past generations who were trying to save a penny would eat. But we've seen, and that is borne out in the data in Brazil, where beef sales have tanked, and we've seen more people buy chicken, and in particular eggs are selling at a record clip in Brazil. So it's a fundamental reshaping of people's lives that we're seeing out there in emerging economies in ways that are that should really resonate with a lot of people in the American middle class, and ways that are going to drag on for a lot longer. The other way to think about all of this, if you back up, is if we think about the last crisis in 2008, 2009, that hit the American middle class pretty hard, and it was a decade of slow recovery after that led to had all sorts of political repercussions. The emerging economies did pretty well around that crisis. This time around, the American middle class is probably going to come out of this okay. In emerging economies, it's going to be a very different story.
And there's this word bifurcating that we talk about in terms of what that means for the global economy, Sean. And so much of the story is backward facing, and basically that little tour of the world that Sean just gave us. We have great charts and data points for all of those things in the story. And Sean, I'm just curious, when you think about what's to come here, like what are the moments and data points that you'll be sort of on the lookout as a reporter for in the months / years to come that will help us understand just how devastating this past year has been.
Sean, you got to be quick, though. Only got 30 seconds.
I'll be really quick here, and it's the same one that we're all looking at here in the United States, and that's how quickly we get back to where we were and the path that we were on beforehand. In a place like India, it's going to end this year with an economy that's 5% or so smaller. In the U.S., it's going to be 1.6% smaller. A place like Indonesia, it's going to be closer to like 10% smaller this year. That's the gap that you need to close. And that's what comes ahead and why it's so important.
It's some of what we've talked about. Tim, I was thinking about our conversations with Joseph Stiglitz, Nobel laureate, talking about the developed having to take care of the developing nations and really be aware. Hey, guys, thank you so much. Bloomberg Business Week editor Jill Weber, Bloomberg News senior trade and globalization reporter Sean Donham. That story, by the way, will be in the upcoming issue
headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We move into the final hour of trading on this Wednesday, April 7th. We have got stocks trading mixed. The Dow's lower, S&P, NASDAQ are both advancing. S&P could be setting another record today, right now up 4 points at 4,078, a gain of about 0.1%. NASDAQ is up 5, higher by less than 0.1%. The Dow slumping at 22 points, mixed Wednesday, down just about 0.1%. NASDAQ NASDAQ 100 index up 0.4%. Russell 2000 tumbling 1.3%. Dow Transport's lower now by 0.4%. Bottom line, U.S. stocks hovering near a record, treasuries fluctuating after the Federal Reserve refrained from signaling it will make any changes to its bond buying program anytime soon. 10-year yield 1.65%, 10-year now up by 1/32. As I mentioned, the Federal Reserve issued minutes of last month's policy meeting. They indicate the central bank is sticking to its playbook as the pandemic ebbs. And with more on the story, here's Bloomberg's Vinny Del Giudice.
The March minutes are by and large dovish. They signal Fed officials are nowhere near scaling back government bond purchases aimed at steadying the economy despite upgrading their 2021 growth forecasts. The Fed's benchmark rate has been near zero since the pandemic erupted a year ago. Next policy meeting, April 27th and 28th. Vinny Del Giudice, Bloomberg Radio.
What about cruise lines? As an economic indicator, it is discretionary spending, also a vote of confidence on the reopening. Carnival Corp's bookings are accelerating, reflecting pent-up demand for cruising, even as the industry essentially remains on hold. Coming up at about 4:35 Wall Street time, we will be speaking with Carnival CEO Arnold Donald. Carnival Corp shares are up now by 2.5%. Rival Norwegian Cruise Line Holdings up 2%, and Royal Caribbean up now by 1.1%. Again, recapping stocks mixed, S&P up 5. I'm Charlie Pellet. That's a Bloomberg Business Flash.
This is Bloomberg Business Week with Carol Masser and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
All right, so just checking here because this was the most read story.
Oh, it still is. I just looked. I just looked, Carol. In the last 8 hours, the most read story.
This is what folks are reading about. And listen, no doubt about it. It's about how Jamie Dimon said he's optimistic the pandemic will end with a U.S. economic rebound that could last at least 2 years.
Yeah, people want to read what Jamie Dimon has to say. And this is his longest letter ever, 66 pages. Sonali Basak is a Wall Street reporter joining us right here in the Bloomberg Interactive Brokers studio. Sonali, great to have you back on the show. Hey, why do you think everybody wants to know what Jamie Dimon is thinking?
It's so funny you asked this because twice today somebody's asked me, people have asked me, readers have asked me to do another kind of take of this or a podcast because they want to know what he's saying without reading 66 pages. It's really a reset to the year, right? Jamie Dimon's tone, positive, negative. What does he think about the economy? Is he happy with the state of America? People care. And honestly, as the biggest bank in the country and, you know, the most profitable, right? It's really a matter of, you know, what he says goes, right?
Well, it's also, don't you think, Sonali, too, and Tim, I think you think that probably agree that, you know, this whole idea that this is someone who has seen crisis before and understands, you know, the impact on the economy, the impact on business, the impact on the financial markets. He's seen it before. He's had a front row seat. He's been at the table during the financial crisis and other crises in his career. And so he is someone who can really kind of look at this and maybe put it in perspective and can see, you know, how bad it was and how quickly it's bounced back.
Yeah, that's exactly right. And he took a tone that was really realistic. And while he said that the markets can be very buoyant till 2023, very specific timeline he gave there, he also really gave a huge nod to how unequal all of this, you know, how unequal the economy really is right now and the country is, and the need for a social safety net, higher minimum wages across the country, among other basic needs, right? You know, immigration reform, healthcare, and things that are very hotly contested, not just among corporate America, but in Washington.
You know, we talked about this a little bit on Quick Take earlier today, Sonali, but the tone of his letter, and you pointed out something that has stuck with me, the difference in tone from this letter versus what we heard from Warren Buffett just a few weeks ago. Talk a little bit about that.
Yeah, the reason I think this is so interesting, so Warren Buffett, when he came out of this letter this year and didn't really talk about COVID and the economy at large, he was criticized as tone deaf. And then you have Jamie Dimon, who weighs in a big way about the tone of the American economy and the American citizen, saying that they've lost trust in our institutions, in our businesses, in our governments, in our schools, and in our media. And, you know, it shows to tell you that, you know, what place does a CEO have in the country? People do want him to speak up, right? people are listening to him not just on the markets, but people do want him to weigh in on social matters, because at the end of the day, JP Morgan's also a big employer, right? They are providing a lot of capitals to communities that need that money to really make it through the worst of this crisis.
Listen, think about all the reporting that's going on right now, and especially we're watching the CEOs down in Atlanta, right, when it comes to Georgia and voting rights, and what people expect of CEOs and corporate leaders who are so careful about what they talk about, politically, Shanali. But I do think there is, as you said, employees increasingly want their leaders to do it. They're, younger employees are shopping their companies based on what those companies stand for.
Speaking of younger employees, that's what else he was afraid of, the new fintechs coming up. Talent-wise, we knew that this was a competitive threat for a while, but for him to say, as the biggest bank in the country, serving more than half of U.S. households, to say what a big threat fintech was and technology, right? He cited kind of the presence of Google and Apple and Amazon. Others have also been concerned about big tech in other ways as well.
Well, so what does that mean for the bank? Does that mean they go out and they potentially acquire a fintech company?
It's a possibility, because remember, JP Morgan can't, at its size, go out and buy a bank, right? And plus, it doesn't even need to. Like, think about how many people it serves and deposits.
I mean, a lot of these fintech companies don't actually consider themselves banks either.
Yeah.
For regulatory purposes and for just the way that they handle money.
Yeah, a lot of this is payments. It's getting money from one side to the other, right? Among other custody, among other things, right? So we'll see how JP Morgan chooses to grow, right? They also have a big asset manager at the end of the day, and that's another place we could imagine them doing some deals.
Yeah, exactly. Are they banks? Are they really a bank, though? I'm just saying, is it time for us to kind of relook at all of this?
What would you call it?
I don't know.
Financial conglomerate?
Thank you. Q Sandy Weil, right?
Exactly.
Like, if you brought
His mentor.
Exactly. This is what, I just find it interesting, and especially when we're talking about risk and, the public perception, concerns about, financial firms still not trusting them. But that's because banks are not banks.
And guess what? That draws the question. Sandy Weil was really the glue to Citigroup in its past when it was really that financial supermarket. Yeah. Jamie Dimon is the glue to JP Morgan. And, what happens, JP Morgan without Jamie Dimon when they start to talk about succession, which they're not doing, of course. But
and he has said he's not going anywhere yet, right?
Exactly. He makes a joke or he keeps saying 5 more years every year. So.
Hey, Shanali, what did he say about returning to work? We heard comments from him a few weeks ago in an interview that he did with Bloomberg TV about how he does see the value in doing stuff in person. But what did he say in the letter about returning to work?
Yeah, he said that most people will be returning to work.
Wow.
We heard from 3, finance titans today, actually, across different types of finance firms. We heard from Larry Fink, who wants to get people back to work. We heard from Jamie Dimon, who wants to get back to work. I talked to a private equity executive at Blackstone also, who says, you can't really be doing your best work over Zoom. So people want to get back to work. That's the bottom line.
I'm going to contest it. I'm going to attest to that, rather. It's just, I'm not going to contest. I'm going to attest to that, because I'm back at home. I got so used to it, like in the early days, and I had a nice little routine. I cannot wait to get back to the office.
Hey, we're excited for you to get back here, Carol.
Huh?
We're excited for you to get back here, Carol.
I have all these lights on. It just, oh my God, it's a nightmare. Shanali, this is great stuff, great reporting, and you were so wonderful in breaking down his so-called quote-unquote letter, because it's more like a mini novel, is it not? Just quickly.
It is.
Just gonna say, all 66 pages.
And that's not even his deputy's work.
Oh, love it, love it. Thank you so much. Shanali Bossack, she's Wall Street reporter at Bloomberg News, back in our interactive broker studio with Tim. Read the story. It's on the terminal, because everybody else is, just saying.
Yeah, a lot of great stuff in there. Hey, let's get a check of world and national news with Nancy Lyons in D.C. Hey, Nance.
Hey, Tim. President Joe Biden says his American Jobs Plan, calling for major investments in the nation's infrastructure, is a way for the U.S. to show our competitors that democracy works.
Do you think China is waiting around to invest in its digital infrastructure or in research and development? I promise you, they are not waiting. But they're counting on American democracy to be too slow, too limited, and too divided to keep pace.
Biden says we don't need to just fix for today, but build for tomorrow. Well, alarms are being sounded by the U.S. military that China may be accelerating its timeline for retaking Taiwan. Bloomberg's Amy Morris has the latest from Washington.
15 Chinese aircraft have entered Taiwan's airspace. Taiwan responded with radio warnings and air patrols to monitor them. Taiwanese Foreign Minister Joseph Wu says the Chinese military has been conducting combat-type exercises closer to the island. Admiral Philip Davidson, the most senior U.S. military commander in the Asia-Pacific region, has told Congress the risks of conflict over Taiwan are, quote, going up and could happen within the next 6 years. In Washington, I'm Amy Morris, Bloomberg Radio.
China's government is warning Washington not to boycott next year's Winter Olympics in Beijing. The Biden administration has said it's been talking with allies about a joint approach to complaints of human rights abuses. A foreign ministry spokesperson is warning, though, of an unspecified, robust Chinese response to a potential Olympics boycott. Global news 24 hours a day, on air and on Bloomberg Quick Take. Powered by more than 2,700 journalists and analysts in more than 120 countries, I'm Nancy Lyons. This is Bloomberg.
All right, Nance, thank you so much. A couple of stories we want to bring to your attention. First up, it's all about timing on Wall Street, is it not? And we're always warned you can't market time things, but Morgan Stanley, when it came to timing, did it right.
Yeah, they sold part of their Archegos holdings before most rivals. Some of that would include $5 billion worth of shares owned by Archegos Capital Management. That was a day before a deluge of block trades sent shockwaves, Carol, across capital markets.
We know about those shockwaves. We've been reporting on it. We did a special on it. And listen, for Credit Suisse, they had to do a $4.7 billion write-down tied to its exposure of Archegos, or Archegos. We're still debating that one. Nomura Holdings said it could take a hit of as much as $2 billion, but it's just timing. Morgan Stanley was one of the early backers of the family office, despite the legal taint tied to Wang. And so, kind of interesting. Morgan Stanley not commenting on it, but again, getting it in and out of the market. Sometimes you just get it right.
Yeah, this one...
although it was part of their holdings, right? So we don't know about all of it.
Yeah, it was. And I still think that we are going to continue to see the fallout from this. I mean, almost every day over the past 10 days, we have learned more about who held what and their exposure. So I expect this to continue.
Speaking of exposure, tax rates, especially on the wealthier, could go up or are going up. Richest New Yorkers risk a new tax blow with a top rate of over 50%, 50.
New York Governor Andrew Cuomo practically begging the rich to return to the city last year. Remember this? He said, we're going to go to dinner, I'll buy you a drink. But now there is concern that he could be raising taxes on some of those wealthiest New Yorkers.
Listen,
Go ahead.
I'm sorry. Go ahead. No. Go ahead.
I was going to say under the deal, the top tax rate would temporarily increase to 9.65% from 8.82%. That's for single filers earning more than $1.1 million a year.
Right. So then you've got on top of that, you've got the city taxes, 13.5% and 14.8%, surpassing the 13.3% rate in California. So, you add it all up, and this is where, you could see some of the wealthier individuals within a place like New York City paying a big chunk of change.
Yeah, those new rates, though, they would expire in 2027, and they are not yet a sure thing.
That's for sure. All right, you're listening to Bloomberg Radio.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Choppy session. We've got 43 minutes to go ahead of the closing bell. The Dow lower, NASDAQ lower, S&P pushing higher, close to a record. Let's get all the details. Lots going on as we head right over to the first word breaking news desk for today's afternoon call. And here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks quiet again today, with the Dow currently down 38 points. S&Ps are higher by 1, and NASDAQ is lower by 9. The U.S. 10-year yield at 1.66%. Gold is down 6 points. Transports fall 50. Among the main 11 S&P sectors, telecom and tech led. Materials and industrials were under pressure. And leaders to the upside in the Dow, JP Morgan and Intel, while Dow Inc. and Boeing led to the downside. In other news, Instacart and DoorDash plan to launch their own credit cards. Biden says he's willing to negotiate on a 28% corporate tax hike. And Facebook added Zoom and GoToMeeting to Portal TV. Wrapping things up, after earnings, Carnival rose as much as 7% before paring gains. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
All right. Thank you very much, Bill Maloney. And just a reminder, just over an hour from now, we will be hearing from the CEO of Carnival. And to hear live breaking news over your Bloomberg, type Squawk, SQUAWK on your terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Gonna find out when we can get you back on a ship, Charlie.
I can't wait.
That's my mission.
The big question, though, 60%, 80%, 100%, when do we go, and how low are the fares?
Yeah, but you are 100% excited, Charlie.
Without a doubt, of course not.
Capacity. How do we do it? All right, Charlie, thank you. Well, that's on everyone's mind. So, too, is something we talk a lot about, Tim, here at Bloomberg. That's the semiconductor shortage facing car makers and more. In fact, there's a few stories in the upcoming issue of Business Week magazine about the industry, including one on Intel. Pat Gelsinger, he's the Intel CEO. He recently talked with Bloomberg about the chip challenges. He caught up with our Emily Chang. Check it out.
COVID caused everybody to step back a bit from capacity and build out and the supply chain of the industry, and it induced a radical increase in demand. So you have supply chains scaling back a bit and demand scaling up radically. Wow, and now we're in a position that there's a meaningful shortage. And, it's going to be a couple of years until that's fully resolved.
Couple of years. That's Pat Gelsinger, Intel CEO, talking with Emily Chang. Tonight, Bloomberg Tech host Emily Chang will host a Bloomberg TV special. It's called Chip Crunch, and it's focusing on the global semiconductor shortage. She joins us right now on the phone in San Francisco. Emily, so great to have you here with Tim and myself. This is one of the big tech stories, if not the big tech story of this year, I feel like.
Well, and it's not just a tech story. It's a story about the global economy, because you really have different parts of the global economy in crisis because they can't get the chips they need. So you have U.S. auto plants idle because they can't get the chips that are needed to put into cars. And part of the reason that this is happening is because of the pandemic. There's been increased demand for laptops, smartphones, all different kinds of consumer electronics, home networking gear. And then on top of that, you have more and more chips going into everything, like cars, like home appliance, in a more connected world. And chip makers just haven't been able to keep up. There are also some interesting geopolitics going on where you've had China stockpiling chips through the U.S.-China trade war, and much of the capacity is actually in Taiwan and in South Korea, which is why you have President Biden calling for more factories to be built in the United States. But that can't happen overnight. There is a big summit that the White House has invited a number of the major chip company CEOs to, including Pat Gelsinger, who we're told will be attending that summit, to talk about what the administration can do. The question is, can they do anything before it's too late?
Yeah, and when is it too late, Emily? I mean, we heard just now that it could take a couple of years for this chip shortage to be sorted out. In the meantime, what are these companies doing to adapt?
So Intel, for example, is doubling down on U.S. manufacturing, spending $20 billion to build new factories in Arizona, but that's not going to alleviate a short-term crunch. A lot of these companies have been asking for tax breaks, for grants to get production back to the United States and make that more economically viable, but that's not going to happen in time either. And so what you have now is all of these companies struggling to simply, make as much as fast as they possibly can, but it's just going to take time to even out. So this sort of puts it in perspective for me. It takes 3 months to make a chip. It takes 2 years to build a chip factory. It takes 2 hours to make a phone and a week to make a car. And so you can make a phone and a car much faster than you can make a chip. And that is why we're seeing this backlog.
I feel like this is such an interesting conversation against the infrastructure plan that President Biden has. This is all about thinking about, where we as a country want to be set when it comes to different industries and certainly high tech as well. Emily, you've seen so many different tech cycles. I mean, how do you see this story? How do you frame it?
So it's interesting. There have been chip shortages before, and as our own Ian King, who's been covering the chip industry for 2 decades, would tell us, we've seen this movie before. The big question is, how is this one different, and how does it end? I think there's a much greater awareness of the lack of chips at this moment because there is so much demand for electronics as we're all continuing to work from home, some schooling from home still happening. But, somebody like him will tell you this will even out, and in a couple of years, there's going to be too much supply. So that's what happens, is the pendulum is going to swing another way. He says it happens about twice a decade that you feel this sort of crunch. And right now we're seeing, major consequences. They've been exacerbated by things like the Texas freeze, which cut down manufacturing. There's been a drought in Taiwan that's cut off water supply to factories. There was a fire at a factory in Japan, and so there's also been these sort of one-off events that have compounded an already bad situation.
What companies, Emily, have been actually well positioned to handle this? And Apple is working on manufacturing its own chips, but my understanding is they still do partner with another company, right?
So Apple is designing its own chips along with Amazon, along with Google, along with Microsoft. And then the vast majority of the companies that design their own chips then contract out to an Intel or a TSMC to actually manufacture those chips, or a Samsung. TSMC is in an excellent position, and if you look at the charts, they dominate what's called the foundry market, which is the business of making chips for other people based on other people's design. They're planning to spend $100 billion over the next 3 years to increase capacity. But what the fact that more of these big tech giants are now making their own designs, designing their own chips, is taking business away from a company like Intel, which used to supply a lot of those chips. So on our special tonight, we're actually going to have the guy at Amazon who is running this business focused on designing chips for Amazon servers, Kindles, and more.
Such good stuff. Sorry for interrupting. Such a great topic, and looking forward to it. Catch Bloomberg Technologies Chip Crunch Special. That's tonight at 5 p.m. Wall Street time on Bloomberg Television, hosted by our own Emily Chang. You're listening to Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So coming up, we're going to talk with Dave Wilson, get his chart of the day. Sometimes it's equities, sometimes he's looking at something else.
Yeah, maybe perhaps a little bit of fixed income. Maybe some high-yield bonds. Maybe.
Formerly known as junk. Formerly known as the artist.
Am I giving too much away?
No.
Okay, good.
We'll get to Dave in just a second. Let's get back to Charlie Pellet. Check on that trading day. We've just got, less than a half an hour to go, Charlie.
Indeed, we're looking at a down day, but can't wait to hear whatever the song of the day is. How's he going to tie it into high-yield bonds? Can't think of too many pop songs from the 70s, 80s, or 90s that have that as a refrain. Here's what's going on. We've got the Dow, the S&P, NASDAQ, all trading lower right now. Stocks and treasuries fluctuating. The dollar's climbing after the Fed refrained from signaling it'll make any changes to its bond buying program anytime soon. Minutes from the latest Fed meeting indicate there will likely be, quote, some time before conditions are met for scaling back the asset purchase program of $120 billion a month. 10-year yield, 1.66%. We've got the 10-year now down 3/30 seconds. S&P down a point, lower a little change, down less than 0.1%. The Dow down 53, lower by 0.2%. And NASDAQ down 31, a drop there of 0.2%. Gold down 6.52 the ounce, 17.36 right now. That's a drop of about 0.4%. Crude oil, West Texas Intermediate, up 0.4%, 59.55 a barrel. Nearly half of new coronavirus infections nationwide are in just 5 states, a situation that's putting pressure on the federal government to consider changing how it distributes vaccines by sending more doses to hotspots. New York, Michigan, Florida, Pennsylvania, and New Jersey together reported 44% of the nation's new COVID-19 infections in the latest available 7-day period, according to state health agency data compiled by Johns Hopkins University. As the pace of vaccinations picks up, researchers want to know if vaccines are actually preventing transmission. Lauren Sauer is an assistant professor of emergency medicine at Johns Hopkins Bloomberg School of Public Health.
As we move into more and more people in the population getting vaccinated and still having exposure or, contact with people who may have the disease, we'll start to see more data on whether or not these vaccines are across the board preventing transmission or if they're just preventing people from getting sick. But either way, they're keeping people out of the hospital, and that is huge right now.
The Johns Hopkins Bloomberg School of Public Health is supported by Michael R. Bloomberg, founder of Bloomberg LP and Bloomberg Philanthropies. Among some of the vaccine names that we do track for you today, keeping an eye on Pfizer shares, they're down 0.5%. BioNTech lower by 3.6%. ADRs of AstraZeneca down 1.6%. Moderna's down 1.6%. Johnson & Johnson little changed, up by less than 0.1%. Recapping 10-year yield right now, looking at 1.66%. S&P lower by less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
It certainly is. Thank you, Charlie Pellet. This is Bloomberg. She barely waited, okay? She barely waited. The Cure.
The Hue.
The Who.
The Who.
Okay.
The Hue.
The Hue, yeah. Maybe in some circles that's how
I was turning on my Hue lights. That's
okay, whatever does it for you, I guess.
Very cool. Great song. Great album. Great band. How does that bring us to the chart?
If you're worrying about how the bond market may affect the stock market, you can be free of that kind of concern.
Nice.
At least that's what some analysts are saying. And I'm focusing on one here, Ian McMillan, a market technician at Client First Tax and Wealth Advisory. He also is involved with some chart watching services. And what he did the other day that got my attention was compare the S&P 500 with the gap in yield between some of the lowest rated high yield bonds. So we're talking the triple C category to be more precise. And the treasuries that they're sort of tied to. So, we're talking about yield gaps. And, it's one of those numbers when it goes down, that means prices are going up. That means people are more positive and vice versa. So, you turn the yield gap around in a chart, and it's more comparable to stock prices that way. And what you see lately is that if you look at these CCC rated bonds, that the yield gap has been narrowing. In fact, Monday, we saw the narrowest spread since July 2018. So in other words, the lowest rated bonds are finding buyers who are pushing up the prices, so which is another way of saying that, there's a willingness to take risk in the equity and the debt markets. And so when you get the two moving together, of course, McMillan and others would tell you that's a positive sign. As he wrote on Twitter the other day, credit markets have yet to signal any type of impending weakness. So, you haven't seen the sort of widening of this yield gap, which would suggest people are backing away from those lower rated bonds, not so willing to take risks, and that would not be a good sign for stocks. But we aren't there yet. And, the chart goes back to 2003, so you can see we were certainly there in 2007, before stocks started falling, by the way. Similar story along the way in around 2014. Stocks held up relatively well then. Nonetheless, you can make the comparison and sort of see how these markets interact. If you want to know more, send me an email. I'll get you the chart, the explanation that goes with it, and everything I do going forward. The email address is dwilson@bloomberg.net. That's dwilson@bloomberg.net.
Yeah, I think you're even seeing, I was looking for this story, but I'm going to be talking to the Carnival CEO a little bit later on. But what's interesting is, they have issued a lot of money, debt and equity offerings, and I believe that their investment grade ratings removed, I think, a couple of months ago. So they've been a high yield company since June, but I think their high yield was trading in a good way today.
Yeah, and they aren't actually all that far off the CCC category either. They're sort of in the B range, so just above the kinds of bonds that we're talking about here. So you'd figure if even less creditworthy companies than Carnival are finding, demand among investors, then, what does it say about them and their prospects?
It's pretty wild, right, in terms of what we're seeing. All right, Dave Wilson, any teas for your stock of the day?
Oh, really?
Okay, we won't do that.
Here's a word for you: homology.
Homology.
All right, that's a deep tease.
Sounds like it needs a hashtag. Hashtag homology. Good stuff. Good music. Tommy, The Who. Love it. Dave Wilson, thank you so much, our Bloomberg Stocks editor. He's going to be back a little bit later on with his stock of the day. And we've just got about 20 minutes left in the trading day, Tim. We're down about 25 points, 26 points on the Dow Jones Industrial Average, just up about 1.5 points here on the S&P 500. NASDAQ down about 28 points, but kind of a mellow mode. Feels like we're in a little bit of a wait-and-see mode.
Yeah, it does. Well, let's head down to Washington, D.C. for a check of world and national news with Nancy Lyons. Hey, Nancy.
Hey, Tim. President Biden is making the case for his $2 trillion infrastructure plan as more Democrats push back on the price tag and Republicans say it focuses on more than infrastructure. Biden says there was a time when railroads and highways were not considered infrastructure, but the country still built them.
The idea of infrastructure has always evolved to meet the aspirations of the American people and their needs. And it's evolving again today.
Biden says he is open to compromise on how to pay for the plan, but he says inaction, unacceptable. The UK variant of the coronavirus is now America's most common strain, overtaking the initial form of the virus. That's according to CDC Director Rochelle Walensky, who says that variant is more easily transmitted and more harmful to those infected. She says that leads to two new truths.
One, the virus still has hold on us, infecting people and putting them in harm's way, and we need to remain vigilant. And two, we need to continue to accelerate our vaccination efforts and to take the individual responsibility to get vaccinated when we can.
Walensky says new outbreaks have been tied to youth sports and daycare centers. She's encouraging those states with rising caseloads to curtail or suspend youth sports activities to slow the spread. Golfer Tiger Woods was going nearly 90 miles an hour, twice the posted speed limit on a downhill stretch of road when he lost control of an SUV outside L.A. That's the conclusion of the Los Angeles County Sheriff's Department, which announced the findings of its investigation today. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. All right, this is one of those stories that I kind of be like, wait, what? Is this real? Is this a movie? It does involve an actor in Hollywood. It does involve a Ponzi scheme.
And some Netflix original content, or so investors thought.
It's like a perfect, write-up for a streaming series.
I was just going to say, it's like the perfect, it's a little too meta to make it into a streaming series. So if you haven't seen the news, we're talking about an actor in a Hollywood Ponzi scheme who sent scotch with annual reports. Zachary Horowitz never made it big on the Sunset Strip, but federal charges against him suggest that he had acting talent, duping several financial firms out of hundreds of millions of dollars and enabling him to live the Hollywood dream after all.
Yeah, that meant chartered flights, a $6 million mansion. He's got a wine cellar, a home gym, or at least maybe he used to have. What's interesting is, here's what he did. His scam was a made-up story that he had exclusive deals to sell films to Netflix and HBO dating back to 2014, according to the SEC, saying he raised a shocking $690 million in fraudulent funds. And then on yesterday, he was arrested. He went by the screen name Zach Avery. He used fabricated contracts, fake emails to swindle at least 5 firms. And it was basically a Ponzi scheme, right? So get new money in, pay off investors, existing ones, and then wait for new money.
Yeah, the classic definition of one. He promised returns in excess of 35%, but he was actually relying on new investors to pay off old ones. That's according to the SEC, which won a court order to freeze his asset. Horowitz's attorney, we should note, Ryan Hedges, did not respond to requests for comment.
No, but CAA says they'd like to do it as a series. No, I'm just kidding.
Really? I was going to say, where is that, Carol? It's like a little. I mean, I know that these companies are moving quickly now.
Just kidding. Just kidding, CAA.
Hey, it
just
does
kidding.
seem like a very good story.
And it's funny, they say that even as the feds were getting closer and closer, that Horowitz tried to reassure clients that his business was real and that he was sorting things out. But listen, it's amazing. $690 million. That's some real money.
Yeah, it's a great story. Check it out. Matt Robinson wrote it. It is available on the Bloomberg.
All right, you're listening to Bloomberg Business Week. Carol Massar, Tim Stanovic. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
I'm Charlie Pellet. Choppy trading session, a Fed Wednesday. We've got 13 minutes to go ahead of the close. S&P back in the green now, up 5 points. 4,079. Could see a record close. We've got the Dow lower by 4. A little change right now, down less than 0.1%, virtually flat on the day. NASDAQ is down 10, drop there of 0.1%. The NASDAQ 100 index, tech-heavy index, up by 0.3%. Russell 2000 slumping 1.7%. Dow Transports right now down by 0.3%. 10-year yield 1.66%. Gold is down $6.70 the ounce, lower by 0.4%. $17.36 the ounce on gold. West Texas Intermediate crude up 0.5%. $59.60 a barrel. Stocks and treasuries fluctuating. The dollar climbed after the Federal Reserve refrained from signaling it will make any changes to its bond buying program anytime soon. Uber says it will spend $250 million to get drivers back on the road and recruit new ones as the coronavirus pandemic eases in the United States. Uber down 2.3%. Crosstown San Francisco rival Lyft lower now by 4.6%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you, Charlie Pellet. Well, it's been a little over a year since the COVID-19 pandemic disrupted our lives. Every day at this time, we're taking a look at different industries or ways of life that underwent monumental change in the past 12 months. Here with today's installment of A Year Like No Other is Bloomberg's John Tucker.
Think of the number of businesses with the word custom in their descriptions. Custom means hands-on. The pandemic meant hands-off. At M. Flynn Jewelry in Boston's South End, Megan Flynn and her sister have been specializing in custom jewelry for over 10 years. The pandemic led Megan to confront some tough questions.
How do you do custom when you can't have a customer come into the store? How can you do video conferencing? How can you make that work? How can you make somebody feel comfortable with leaving their, treasured piece with you?
She shifted to contactless sales and curbside pickup, and she couldn't rely on any old website to continue with custom. She has a custom concierge. They schedule private meetings over Zoom and adopted the use of computer-aided design. By adapting and being creative, this business continues to survive after a year like no other. I'm John Tucker, Bloomberg Radio.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
Just drive, baby.
It's the question that drives us.
This is the drive to the close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, just about 10 minutes left in today's trading session. Let's get to it with Leo Kelly, founder, CEO, and co-CIO at Verdance Capital Advisors, overseeing $3 billion in client assets. He's back with us on the phone from Hunt Valley, Maryland. Hey, Leo, good to have you here with us. How you doing?
Oh, doing well. Thanks for having me on the show. We're slowly seem to be finding our way out of the crazy year that was 2020, and that's good news.
Does it feel that way? Tell me why you say that.
It does feel that way. I think as we look around anecdotally at activity, I know airport traffic is up tremendously. We're starting to get back to levels we were in the past. It's true of activity on the roads and so forth. And of course, just look at the markets. Look at look at what's happening not only in the markets but in the economy with the delays you're seeing in products because pent-up demand combined with current demand combined with lack of inventories is starting to explode and prices are starting to rise. So yes, it does feel like we're coming out of this.
So expectations, if you look at the equity markets, are certainly high as to where we are in the recovery. We are going to start hearing from companies soon, not just about their first fiscal quarters, but also how they're thinking for the rest of the year. What's the chance that companies don't deliver on these high expectations or the concern?
Well, I do think when we look at the market, I think it's going to be hard for companies to not deliver here. I think there's some chances like demand was good, but supply was an issue, right? Because the demand came back so abruptly, and there may be very specific circumstances. I do think that valuation in certain areas is an issue, and you can achieve a really good growth in a business and see your stock get hit pretty hard because it doesn't match what the market is expecting. You're executing on all cylinders, but the market starts to expect beyond what you're capable of. Now that said, there's so much money floating in this system. I mean, between what the Fed has injected, multiple stimulus plans, now we're talking about another $2 trillion. It's astonishing how we use the word trillion with such ease these days. The amount of money in the system is astonishing. I mean, money supply went up over 25% last year. And that, I think, there's just no way to stop that momentum in the economy with that much money floating around the system.
And that makes you nervous?
It does make me nervous in the long run. In the short run, Carol, that amount of money put in it has to have a positive effect, especially when that money translates to money supply increases. In 08-09, the money went into the banks and the banks held on to it. So it never really increased money supply. Combine that with the fact that consumers are in far better shape than they were the last time because they still got paid through the crisis via unemployment benefits and PPP. They didn't have any place to spend the money. You can only do so much online. And so personal savings rates exploded during the COVID. And then you add the fact that debt is down from the last debt crisis. Housing prices are up, 401ks are up. So the consumer's in better shape. Their net worth is better. They've had personal savings increases, and they've got all this pent-up demand and this pent-up activity that they want to start to enjoy. So I do think it speaks well short run. Long term, it's an issue.
Okay, so I'm curious what your short term is, and I say that because Tim and I earlier talked about the most read story on the Bloomberg today, which has Jamie Dimon, of course, of J.P. Morgan, saying this boom could easily run into 2023. So he's talking about the economic boom and ultimately the market boom. Is that your short-term range, or are you talking shorter than that? Because you guys have been building up cash or holding on to cash.
Yeah, we've started to build a little bit more cash. I think we have to look at there is a separation between equity pricing and economic activity, and equities can get ahead of themselves. And in fact, if you look at the growth markets, they have not performed well this year. And we have been overweight international in value and small value because that performs well coming out of a recession. And V-shaped bounce has always been our prime model. Now, I do think this thing has legs. I do think we'll see volatility because interest rates have to go higher. Inflation is here. Pricing is going to start and continue to rise. So in an from the intermediate term, which is 3 years out or so or more, you do have some challenges. In terms of the long term, I say this all the time. We are addicted to painkillers. Every time there's financial stress, we just pour money at the problem. And that's okay now where we currently stand. But I liken it to an aircraft carrier. We're heading for the iceberg. We can see it out in the distance. And rather than start the turn, we're speeding up. Sooner or later, we have to pay the piper. And so for now, short-term, intermediate, I think we're fine. But this is something that sooner or later we have to reverse the trend and start the turn.
Well, that's an unfortunate note to end it on. the image of the ship heading toward the iceberg. Unfortunately, we are out of time, Leo, but thank you so much for joining us today. Leo Kelly, founder, chief executive officer, and co-chief investment officer at Verdance Capital Advisors, joining us on the phone from Hunt Valley, Maryland.
Climate change might melt the iceberg, so maybe
I was thinking of a Suez Canal type of thing, too.
All right, stick around. We've got the closing bell in a moment.
headlines and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. Record on the S&P 500 index. Move higher for both the Dow and the S&P. NASDAQ decline, lower by 9, down by about 0.1%. Folks from Democracy Investments virtually ringing that closing bell. 10-year yield 1.67%. Gold down $6 the ounce, down 0.4% to $17.37. West Texas Intermediate crude up 0.5%, 59.61 a barrel. Bottom line here, record on the S&P 4,079, up 5, a gain there of 0.1%, bringing the S&P's year-to-date gain to 8.62%. Stocks and treasuries fluctuated. The dollar climbed after the Federal Reserve refrained from signaling it will make any changes to its bond buying program anytime soon. Leo Kelly is CEO at Verdance Capital Advisors. Moments ago right here on Bloomberg Business Week, he told us, no question, anecdotally, things are improving.
You look at what's happening not only in the markets, but in the economy with the delays you're seeing in products because pent-up demand combined with current demand combined with lack of inventories is starting to explode and prices are starting to rise. So yes, it does feel like we're coming out of this.
Apple shares up for a 5th consecutive session, longest winning streak since January. Apple up today by 1.3%. Carnival Corp's bookings are accelerating, reflecting pent-up demand for cruising, even as the industry remains essentially on hold. Carnival Corp shares up today by 1.4%. Norwegian Cruise Line Holdings up 0.7%. Royal Caribbean up today by 0.4%. Coming up in roughly 30 minutes, we'll be speaking with Carnival CEO Arnold Donald. Again, recapping a move higher for the U.S. stock market today. Turned out to be a mixed Fed Wednesday. NASDAQ lower, the S&P Dow both higher. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Nobody move a muscle.
Bloomberg Business Week. Movers and shakers.
Damn, Stippy, you got some moves.
On Bloomberg Radio.
All right, everyone. Time to take a look at movers and shakers and a little bit more of the trade. Charlie, of course, breaking down those major equity averages. If I take a look at the S&P 500, 188 names higher, 315 lower, 2 unchanged. And, little change, though, Tim, overall, when you look at those kind of the bigger, broader picture.
Yeah, that's right. Kind of equal green, equal red. When you take a deeper dive into sectors in the S&P 500, communication services leading the pack higher by 0.7%. Information technology higher by just about half a percentage point. Energy higher by about 0.4%. One laggard standing out, though, materials down 1.76%, really underperforming every other sector. Industrials down about 0.4%. And healthcare down 0.2%.
Do want to mention Carnival because I'm going to be talking with the CEO in a little bit here. Stock was up as much as 7% today, still ending the day with about a 1.4% gain. They came out with their quarterly update, still a big loss, but talking about having enough liquidity to get back to full operations, talking about getting ships back, and this is coming where late yesterday we heard from the CDC talking about maybe ships coming back in the U.S. by midsummer. So looking forward to lots to talk about with Arnold Donald, CEO of Carnival. In the meantime, let's bring in our Bloomberg News cross-asset reporter, Katie Greifeld. Katie, was this kind of a ho-hum kind of a day for you?
It kind of felt like it. I mean, if you look at the equity market, I want to note that this is the second day that volume has just been falling off a cliff. You look at the S&P 500 specifically, trading volume was 20% below its 30-day average today, and that's actually the second day in a row. So it makes it hard to read too much into any of these moves. I mean, you did see tech outperform a little bit. You saw small caps really take it on the chin here. The Russell 2000, I think it ended, 1.7% lower. So you're kind of seeing a reversal of this rotation trade, albeit in very low volume.
Where did the Fed come into this? We got Fed minutes just after 2 p.m. today. How did that move the markets?
That was part of the ho-hum, wasn't
Yeah, I mean, it kind of was. Like, it really, they moved higher, but barely.
Yeah,
it was ever so slight.
I'll say, not too much to write home about in those Fed minutes. I mean, if you read through it, it's all phrases we're pretty familiar with. Substantial further progress, employment well below pre-pandemic levels. And I will say that was kind of expected because the tone from FOMC members, it's been remarkably consistent, remarkably dovish since the meeting. And that's coming straight from the top, from Powell himself. So that's what was reflected in the minutes today. And I will say you did see a little bit of action in the bond market because you're starting to see some of those Fed rate hike bets fade. Traders had been pricing in a pretty aggressive path for tightening from the Fed. That's starting to fade a little bit as traders learn, again, maybe don't fight the Fed.
Just going to mention a headline that just crossed the Bloomberg. Man, this caught my attention. Twitter is said to have discussed a $4 billion Clubhouse takeover.
Wow.
Take that, Katie Greifeld.
Wow. I mean, I'm not even sure where to take that. I mean, I think Tim and I were joking the other day, like $4 billion valuation for Clubhouse.
I have bad news. That was this morning that we were joking about this.
No.
So that's what kind of day it's been for
felt
us.
48 hours ago.
I know. Well, it does. Look, this is an important number because we just learned yesterday from our colleague Katie Roof reporting that the company is looking at raising money that would value it at $4 billion. Twitter has in recent months launched a competitor to Clubhouse called Spaces that I've used a little bit that I actually find really helpful because it has that Twitter network already built into it. And I do kind of feel like anecdotally that Clubhouse moment, right? It was a few weeks ago.
You and I have talked about that. We're we think it's past.
I don't want to be like, I just anecdotally, it really seems like I don't know.
I do open the app to see who's following me, just to see who's following me.
Who's following you?
That's it. It's very narcissistic. Yeah.
Twitter shares, by the way, look like they spiked initially maybe on that news, but now they're down just a hair, down about 0.35%, so just down about 1/3 of 1%. But it's interesting. It's just, again, this disruption, right? And I love it that Twitter has now become kind of one of those older companies and now looking at kind of what the new kids are doing.
Yeah, I do too. And they haven't made huge acquisitions to change the product in the past. I mean, Twitter is one of those products that hasn't changed significantly since it was invented over a decade ago. I mean, there aren't huge changes to Twitter. Yes, we can send longer tweets now, but if you look at the way that Facebook has changed, it's a lot more than the way Twitter has. What do you think, Katie?
I mean, I would agree with you. And it is interesting, given that the Clubhouse moment does seem to be fading, that Twitter has already launched a competing product that they would be looking to do this. So I'm interested to see how this story plays out.
All right, guys, it's Clubhouse calling, saying, please don't count us out. Come on. I mean, really.
See you all in Clubhouse.
Blink of your eye and it's gone. I mean, it's hard to say, right? But it's just interesting kind of some of the maneuvering that we're seeing. And things do feel like, Katie, the cycles, despite today being kind of lackluster. And I was thinking about when you were talking about the Fed talk, because we're going to hear, I think Kathleen Hayes has a conversation with Mary Daly. I think there's another couple of Fed speakers that are coming up maybe tomorrow morning on Bloomberg. So, we're going to hear a lot about that. Katie Greifeld, Bloomberg News cross-asset reporter. Thank you. Thank you. All right. You are listening to Bloomberg.
All right, Dave, you're up.
Hi, my name is Dave.
Wilson, where are you? Wilson!
Just what do you think you're doing, Dave?
We're going for the price on Wilson.
Open up the door, it's Dave. Who? Dave. Hey, Mr. Wilson!
Hey, Mr. Wilson, give us your stock of the day.
Homology Medicines. It's a developer of treatments based on gene therapy and gene editing. The company's now working to address a couple of inherited disorders called phenylketonuria and Hunter syndrome. Homology Medicines was founded in 2015 and went public in 2018. The ticker is FIXX. That's fixed with 2 X's. The shares were sold in the initial public offering at $16 each and almost doubled within their first year of trading. The entire gain was later given back and then some. Homology Medicines was set back last month when Switzerland's Novartis ended a licensing deal. The agreement was signed in 2017 and covered use of the company's technology for eye treatments. Homology Medicines followed up the loss yesterday with a stock sale, raising $50 million. A person familiar with the matter said the shares were sold at $7.90 each, and if you're keeping score, that's less than half the IPO price from 3 years earlier. Homology Medicines dropped to a record low after the sale. The shares closed with a loss of almost 23%.
Ouch.
Wow, down more than 36% so far this year.
Yeah, not looking good. And if you bought shares at 790, they closed at 718, so you're already losing out.
Yeah, that's pretty rough. All right, Dave Wilson, thank you so much. Your stock of the day. And of course, go to the One Dave on Twitter and you can catch up with his chart of the day in case you missed it. Dave, have a good night. Tim, have a good night.
Thanks. I'll see you tomorrow.
All right, sounds good. All right, let's get back to world and national news. Over to Nancy Lyons. We go in D.C. Hey, Nance.
Carol, President Biden says it's time for the U.S. to make major investments in not only traditional infrastructure, but the nation's future needs.
We are America. We don't just fix for today. We build for tomorrow.
He says he's willing to do this on a bipartisan basis, but it'll need to be paid for. He's recommending an increase in the corporate tax rate. Authorities say Tiger Woods was speeding when he crashed an SUV in Southern California less than 2 months ago, leaving him seriously injured. Los Angeles County Sheriff Alex Villanueva says the posted speed limit was 45 miles an hour, but Woods' speed was way over that.
Estimated speeds at the first area of impact were 84 to 87 miles per hour, and the final estimated speed when the vehicle struck the tree was 75 miles per hour.
Villanueva says Woods may have mistakenly put his foot on the gas instead of the brake. The use of force continues to be the focus as prosecutors make their case for conviction of former Minneapolis police officer Derek Chauvin in the death of George Floyd. Prosecutor Steve Schleicher asked a hired use of force expert to weigh in on the knee on the neck technique used by Chauvin.
Sir, do you have an opinion to a degree of reasonable professional certainty to how much force was reasonable for the defendant to use on Mr. Floyd after Mr. Floyd was handcuffed, placed in the prone position, and not resisting?
Yes.
What is that opinion?
My opinion was that no force should have been used once he was in that position.
Sergeant Jody Steigers with the Los Angeles Police Department. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts.
All right, Nance, thank you so much. Just watching Twitter here in the after hours to see if we're getting any kind of movement. Joining me right now, of course, is also Charlie Pellet of Bloomberg News. And Charlie, Twitter, it looked like it spiked, and then let me just pull it up here. Now just kind of flat here. But this story definitely caught my attention. Twitter said to have talked about a $4 billion takeover of Clubhouse.
Indeed. Right now looking at a gain of roughly 3% after hours, and shares of Twitter did hold talks in recent months, as according to sources, companies disclosing that potential valuation, roughly $4 billion. Twitter spokesperson declining comment. Clubhouse rep isn't immediately responding to a request for comment. Again, though, this is a Bloomberg News story breaking moments ago. Bloomberg did report earlier this week that Clubhouse is in talks to raise funding from investors in around valuing the business, as I mentioned, at $4 billion.
Yeah, listen, Clubhouse, we were just talking about it. I've done it once with an internal Bloomberg discussion. Clubhouse, though, barely a year old. It has drawn appearances from some of the biggest names in the business and Hollywood. We're talking about Oprah. We're talking about Elon Musk. And it's very interesting. But at the same time, you've got established social media companies have quickly gone to work on their own versions of Clubhouse. So you've got Twitter, Facebook exploring one as well. Microsoft's LinkedIn, Slack Technologies have also said that they're working on similar features for their networks. Listen, these things, it's what happens. It's like a party, but on a social platform, Charlie. And you're seeing, these discussion groups pop up all the time. And we'll see where it goes ultimately.
Exactly. And the point that I want to repeat that the three of you, Katie and Tim, made just a couple of moments ago. And all of a sudden, this industry is moving so fast. Twitter is almost old school in terms of how things are moving, how rapidly things are moving in tech land.
Yeah, exactly. I'm going to actually do a Bloomberg Live event next week with a bunch of CEOs, and it's all about disruption and innovation, whether it's the hotel industry, whether it's movies, whether it's, just all of our kind of world has been turned upside down in a big way.
Hopefully there'll be a new poster child between now and then.
I'm sure there will be. Charlie Pellet, thank you so much. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Bloomberg World Headquarters. I'm Charlie Pellet. Record day on Wall Street. S&P pushing higher, up 6 to 4,079. A gain there of about 0.1%. Stocks did rise with the dollar. Treasuries fluctuated after the Fed refrained from signaling it will make any changes to its bond buying program anytime soon. Turned out to be a mixed Fed Wednesday, though. The Dow higher by 16, up less than 0.1%. A down day for the NASDAQ Composite Index, lower by 9, down by about 0.1%. The NASDAQ 100 Index, full of tech stocks, up today by about 0.3%. Apple up for a fifth consecutive session, up by 1.3%. 10-year yield 1.66%. Gold down 5.86 the ounce, lower by 0.3% to 17.37. West Texas Intermediate crude up 0.6%, 59.68 a barrel. Sources tell Bloomberg Twitter held talks in recent months to acquire Clubhouse, the buzzy, audio-based social network. Recapping S&P at a record up 6, a gain of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So the mayor of one Southeast city is looking to make his city a new Silicon Valley. He and his city of Miami is a subject of a story in Bloomberg Businessweek magazine this week. Earlier, I caught up with the mayor of Miami, Francis Suarez, and we started about the tweet that got the ball rolling. You have been looking forward when it comes to your city of Miami, looking to make it a high-tech city. Tell us about the viral moment back in December when a Silicon Valley venture capitalist tweeted about moving to Miami from Silicon Valley, who asked, okay, guys, hear me out. What if we move Silicon Valley to Miami? You responded.
I did. I said, how can I help? And frankly, it's been a 10-year passion project for me. I'm a fairly young mayor. I was a fairly young elected official when I was elected. I was 32. I was 40 when I was elected mayor. So I understand, and I understood, and I've understood for 10 years, that the future of our economy as a country, as a world, is tech-based. That is inescapable from my perspective. That is nonpartisan from my perspective. That's just a reality. And the quicker that cities embrace that reality and start fashioning their economies around that reality, the better off and the more equitable cities that we're going to have in America. And so that has been our goal, our mission. The How Can I Help tweet was sort of a lightning in the bottle moment where we propelled ourselves from someone sort of on the outer range of the conversation to literally the city that's most talked about right now in the world on tech. Whether anyone thinks that we're going to overtake Silicon Valley tomorrow or not, no one can dispute the fact that everybody right now is talking about Miami tech. It is the hottest thing, and it's been hot since that December 4th tweet, which is, I think, an accomplishment in and of itself because, we live in a 24-hour news cycle where news changes quickly and people move on to the next story. And, to keep and maintain the attention of the city for over 4 months of the country, for over 4 months in the world, really is a significant achievement.
Right. But talk is one thing, action is another. So tell me about, you've had conversations or you've been tweeting with Elon Musk. What's the plan? What's the specific responses? What's the specific actions that maybe are coming from either venture capitalists or investors to help create your mission or your dream?
Well, let's look at the deliverables just in the last 4 months. We have, through our DDA program, created 850 jobs just in the last 4 months. That's with an average pay of over $100,000. That's over $85 million of economic activity just from one program in one section of the city. We had SoftBank that created a $100 million Miami initiative for companies that are going to be built here in Miami or people that are moving to Miami. We had the author of that tweet, Delian, who helps run the Founders Fund, which is probably the most prominent VC firm in San Francisco, open an office in Miami. So you have Founders Fund led by Delian, led by Peter Thiel, led by Keith Rabois, who were sort of part of that PayPal group
Mafia?
of people that created PayPal. Well, you could say it. I won't use that word just because it sounds so derogatory. But, I know. But yes, the PayPal group of people that started PayPal, and then having, conversations with Elon Musk about how do we look towards the new future of transportation and transportation technology. I mean, if you just look at those deliverables alone, you've seen that we've radically changed Miami in 4 months.
Have you talked with Elon Musk directly, or has it been all through tweets?
Yes.
You have?
No, I talked to him directly. A phone call. We spoke by phone for about 30 minutes. He was excited about the prospect of Miami being his second, quote unquote, second customer for the Boring Company. I went out to Las Vegas and saw the Boring Company's boring tunnels in person, and was just blown away. I took technical experts from the city, from the county, and they were blown away by the technology and by the ability to do it at a fraction of the cost.
Well, but how do you do it? Because, I mean, there's things that you've tried to do. Listen, we all were talking about it at the newsroom when you put out a resolution to potentially pay some of your municipal workers in Bitcoin, accept taxes in the cryptocurrency, maybe invest city funds in it. The Miami City Commission, though, only agreed to look further into the matter at some unknown future date. It feels like it's going to be an uphill battle. Will it? And are you still working to make Miami a crypto hub?
Oh, absolutely. And no, I don't think it's an uphill battle at all. I think it was a 4-1 vote. I mean, in politics, you rarely ever get a unanimous vote. One of the commissioners wanted to sort of dilute the resolution a little bit. And look, they're both commissioners that are over 70 years old. I understand that for them, it's something that maybe they don't understand quite as much as someone who's in their 40s or 30s or 20s. So yeah, there's definitely an education process. There's definitely a collaboration process. When you're dealing with a council, and a mayor-council relationship, that's always, whether it's crypto or whether it's garbage cans. I mean, it's always something that's complicated and tenuous, and you have to work on it continually, and you have to gain people's trust issue by issue. So I think a 4-1 vote was a resounding vote to go forward. And now we have to go into the next phase, which is to procure a company that will do it. In terms of the last piece, which is for us to invest, look, if we would have invested when I suggested, we would have been up, $13,000, which is about 20%. But the key is there may be some state laws that are required to be passed that allow us to hold crypto. But the state government right now, based on some legislation that I've advanced, has imitated Wyoming's crypto laws. And that is sailing through the legislature, and hopefully will pass and be signed into law this legislative session. And we're looking at things like chartered banks that will allow people to deposit crypto into banks. So there's a lot of innovation coming on the crypto space in Miami. We also want to be a mining hub for the world.
All right, and that was the mayor of Miami, Francis Suarez, talking about his efforts to make his city a new hub for technology. He is definitely on a mission. I do want to point out this is the subject of a story in Bloomberg Businessweek magazine. It's by our own Miami bureau chief, Jonathan Levin, and it will be out on newsstands on Thursday later on this week, and it will be on at Bloomberg.com and also, of course, always on the Bloomberg terminal. You're listening to Bloomberg Businessweek, and this is Bloomberg Radio.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Yes, indeed. This is Bloomberg Business Week. Carol Masser, and you're listening to Bloomberg Business Week. Coming up, we're going to talk about another one of the most read stories on the Bloomberg. Has to do with a big financial guy. It's not Jamie Dimon, though, this time. This time around, it's going to be Mr. Fink over at BlackRock. We'll get to that in just a moment. First up, though, let's get back to your top business stories and check in with Charlie Pellet.
Hi, thank you very much. Happy Wednesday to Carol. Here's what's going on. The Dow, the S&P both higher. NASDAQ lower, S&P at a record. Up 6 today, ending the session. Fed Wednesday, by the way, at 4,079, a gain of about 0.1%. The Dow up 16, higher by less than 0.1%. NASDAQ slumped 9, down 0.1%. Tech-heavy NASDAQ 100 index up today by 0.3%. Russell 2000 down 1.6%. Dow Transports dropped 0.3%. Stocks did rise with the dollar. Treasuries fluctuated after the Fed refrained from signaling it will make any changes to its bond buying program anytime soon. 10-year yield 1.67%. Gold down 0.4%, 17.36 the ounce. And West Texas Intermediate crude up 0.6%, 59.70 a barrel. What about the market outlook as the economy continues to reopen? Alicia Levine is Chief Strategist for Investment Management of Bank of New York Mellon.
We like the reopening. We like travel and leisure. We think what we're calling the epicenter stocks. So the companies that were really decimated, that were able to raise cash, or, live through the pothole and emerge another day. We think those are going to be very, very strong here. We still think there's room to run.
United Parcel Service says it's buying 10 small electric-powered aircraft that take off like helicopters and fly like planes, aiming to reduce its costs from contracting with small air freighters to reach far-flung areas. UPS down today by 0.6%. FedEx tumbled 1.1%. San Francisco-based Uber says it's spending $250 million to get drivers back on the road and recruit new ones. Uber down 2%. Crosstown San Francisco rival Lyft slumped 5.1%. And sources tell Bloomberg Twitter held talks in recent months to acquire Clubhouse, the buzzy audio-based social network. Twitter after hours up by almost 3%. Recapping S&P at a record up 6, up by about 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, this is among our most read stories on the Bloomberg. It's about BlackRock Chief Executive Officer Larry Fink talking about in-person meetings, how they are a top priority after COVID. Let's get to this story. Bloomberg News investing reporter Annie Massa on the phone in New York City. Annie, first of all, we talked earlier about Jamie Dimon of JP Morgan. He is certainly one of the go-to voices when we want to know what's going on in the financial community, but kind of the world at large. BlackRock's Larry Fink is the same thing.
That's exactly right. Larry Fink, as the head of BlackRock, the world's largest asset manager, also has his annual letter out today, and he kind of gives an overview of many different things, obviously addressing the pandemic, topics like climate change that have been important to him. But one of the things that comes up is when his interest in returning to in-person meetings, which as people weigh, whether and when to go back into office settings and to go back to seeing people in person, was kind of interest.
Well, and it is interesting because I do feel like some of the financial community at first were like, yep, we're all in on hybrid. And then we're like, nope, we want to get everybody back to work.
It's been a bit of whiplash. I mean, we've all been through so much in the past year, and of course, things have changed really rapidly. But as you see the U.S. vaccination campaign ramping up and more people getting vaccinated, some people even starting to gasp, come back to cities, there have been financial firms, and BlackRock's one of them, that have signaled that going back to offices when it's safe will be something that they're going to try and do, and that full-time remote work shouldn't be expected as the norm.
All right, so Jamie Dimon's was, I think, about 66 pages, so I was calling it a mini book. Larry Fink, tell us, I'm assuming there was more than just this point on in-person meetings. What else did he cover, and how long a letter was it?
That's exactly right. That's funny. It wasn't quite as long as Jamie Dimon's. It was more like 11 pages, so not quite as much to go through. Another interesting point that he addressed in this letter was some of the recent cultural issues that have been coming up at BlackRock. And this has taken various forms. They've had issues around comments made by an executive several years ago in a work context. Also, a former employee who wrote a Medium post about how she faced discrimination at BlackRock. And some of this has been bubbling to the surface. He wrote that he knows that BlackRock's culture isn't perfect, and he's trying to work on improving the firm's standards, and kind of address that with shareholders. So that was an interesting point that stuck out to me in the letter as well.
Well, he's someone who's really been out in front, I feel like, with a lot of the big societal issues, whether it's ESG. Remember the big letter he sent out to the companies he's investing in. So this is kind of his bailiwick, right? These are the things he likes to play around with.
That's right. That's one of the tough things about running such a big firm, operating in so many places and in so many different parts of the market, and just with such a huge employee base. This is a sprawling company, and it's an exercise in trying to keep your own values kind of going in your own firm as you're telling other companies what to do. Because BlackRock, of course, being a major shareholder of most all S&P 500 companies.
Did he weigh in on politics and infrastructure? I'm thinking just because that's such a front and center topic, certainly for our world, and really, I feel like the investment world as well.
Nothing that straightforward, although it's true that infrastructure has been a huge point that I think has underscored in varying administrations. But he did address government, particularly when it comes to climate. Climate has been a major push for BlackRock. They've been trying to incorporate it more to their own investing strategy. He's signaled that he wants companies to disclose how they plan to adjust their business model to a net zero future. And as far as government goes, he did say that government has a crucial role to play in setting policies, in mandating disclosures when it comes to addressing climate change. So we all know that public companies have really been in the spotlight as far as global warming concerns goes, and Think did say, hey, government has a role to play here too.
Hey, Annie, we just got about 30 seconds left here. You know, you follow the financial world. I mean, do you feel like there's a consensus that, I don't know, come fall, it'll be a lot more normal in terms of the amount of people are back in the offices?
Just anecdotally, it does seem that people are feeling a little bit more optimistic about getting back in person and kind of looking forward to it, even in some cases. But it will absolutely be case by case and not for everyone.
Yeah, listen, I'm working from home this week, and it's like driving me crazy after having been back in the office. Just going to put that out there. Good stuff, kiddo. Great reporting. Nice to check in with you. Of course, that is our own Annie Massa, Bloomberg News investing reporter Annie Massa on the phone in New York City. Check out her story. It is among the most read on the Bloomberg, and talking about BlackRock's CEO Larry Fink, talking about those in-person meetings. Speaking about in meetings, we are going to be catching up with the Carnival CEO, Arnold Donald. They came out with a quarterly business update, talked about the financials, talked about bookings. But this is coming right after we heard from the CDC late yesterday, talking about maybe we could see sailings, the big cruise ships, back in operation come midsummer, and that could be a big change. So we're going to get Arnold Donald's thoughts on that. What does that mean? What does the summer sailing season look like? Carnival, by the way, they've got 9 brands. Several over in Europe are already up and running. So we'll see what he has to say about vaccine passports, getting ships back out on the high seas. Carnival Corp CEO Arnold Donald. Oh, so we're bringing him in. My bad. I welcome everybody on Bloomberg TV. It's been a little bit of a crazy day, a crazy week, and a crazy year. Arnold Donald is with us, and he joins us on this Wednesday. Arnold, first of all, great to have you here with us.
Hi, Carol. How are you? Everything going well?
I'm doing okay, doing well, hanging in there. Tell me about you and tell me about Carnival, because I have to say I was pulling together my notes last night, and then I kind of woke up this morning and had to certainly tweak them. Tell me about the CDC now possibly offering to or allowing ships to be out and running by midsummer. What's changed with the CDC, and what are the restrictions that are going to have to happen in order for that to actually come to fruition?
Well, as you might recall, Carol, the CDC, I think last October, issued a conditional sail order, and they came out in phases. The first phase was bringing ships back in the U.S. waters, and was primarily with minimal crew on board. We finished that phase of it in terms of having in ourselves 30 ships that are currently in green status. They issued on April 2nd the next phase. Frankly, what has been issued doesn't give us a specific time to be able to return, and also is really not workable in the current form. But again, it just came out, and we have an opportunity to discuss with the CDC and the administration to make certain that we do have something that's workable, and hopefully that would allow us to be able to sail in July. And we're hoping it'll be something that's more in line with the advancements of vaccines that's occurred and the rapid advancement of the vaccines that the administration has been so successful with, as well as the advancement in treatments and the advancements in rapid testing, none of which existed when the original conditional sail order was written. So we're hopeful that we'll be able to meet with the administration and CDC and come up with something that's practical and will allow people to return to their choice of vacation travel and get a whole lot of Americans back to work. As you know, Carol, over 500,000 people are impacted in the U.S. In terms of jobs associated with the cruise industry outside of the cruise companies themselves.
No, it affects a lot of other jobs and other industries connected with the cruise industry. Hey, one thing I got to ask you, Arnold, is how much of Carnival threatening to relocate their ships to other markets outside the United States do you think was the reason for the CDC change? Because it was just a few days ago that they came out, and we're still kind of holding firm. What happened? What were the conversations that maybe you and other members of the cruise line industry had with the CDC?
No, there was no threat or anything. It's just a practical reality that if we're not able to sail from the U.S. In some months soon, we would have to sail from elsewhere. And so some of the ships would home port, and a number of companies have already announced home porting ships that normally would have been sailing out of the U.S., home porting from different places in the Caribbean. But it's not a threat or anything. It's just a natural outcome of not being able to sail from the U.S. I'm not sure anything has changed. Perhaps it has. I haven't heard directly from the CDC or the administration anything has changed. I think that they genuinely believe the information they put out might allow some limited sailing as early as July. And so we'll have to discuss that with them. Our timelines don't quite match up with that, but maybe we don't understand everything. So the CDC has a job to do. They're trying to do their job. I think as long as we work together with the CDC and the administration, we can all get cruise, back soon, and we can get it back safe, whereas in the interest of public health, and we can have all those 500,000 workers no longer suffer from not being able to earn a wage and do their jobs in the ports and the various travel agents and all the other things that are connected to cruise.
Well, Arnold, does it feel like that there's a more constructive conversation with the CDC right now? And I ask that because I do also wonder, is there kind of a last straw for you that if the CDC in a couple of months isn't clear about what it will take to get ships, U.S. home-ported ships, up and running, is there a point where you're going to say, okay, I'm done, and we're going to move ships abroad?
As you know, we have 9 brands, Carol, so about 59 of our 90 ships are not under the conditional sail order. They don't, sail in the U.S. anyway. And so there we are already active and sailing, and we've announced sailings in the UK, we've announced sailings in Greece, AIDA, our German brands are already sailing from the Canary Islands, all on a limited basis at this point, but is moving in the right direction. And we're optimistic that we'll be able to do the same here and continue to dialogue with the CDC. I think one of the big issues here is the relative mentality around risk. So today, you could board a plane, fly to a country, get on a cruise ship and sail, fly back from that country and come back to the United States. You have to do certain testing, et cetera, but you can do that. And today, even if vaccinated, you can't get on a cruise ship in the U.S. And that's whether you're vaccinated or not in terms of what you could do outside, from the U.S. Going somewhere else to get on a cruise ship. So, and if you look at other travel and entertainment sectors, you talked about spring break down in Miami, or you look at arenas where people are starting to be able to attend sporting events, restaurants, hotels, resorts, air travel. There's a level of risk management and mitigation. And so we would like to just be treated similarly to the rest of the travel and tourism sector. And we also obviously have enhanced protocols already in place versus many of those sectors.
Well, does it not make
medical screening, medical centers on board, et cetera.
Forgive me for interrupting, but does it not make sense to you, Arnold, that for planes, people get on a plane and they're sitting right next to each other. There seems to be kind of different requirements for people in different parts of the tourism industry, and yet you folks are still waiting, to be able to get up and running. Does it seem, is this disparate treatment fair in your view?
I think, I think everyone is trying to do what they think is best for public health. And I think together we can work and find a way forward. It's true, you get on a plane. Some people say, well, you're only on a plane for a few hours. But you are sitting right next to someone. Before you got on the plane, you were in an airport terminal. Before you were on the airport terminal, you were in some kind of transportation. Before that, you came from somewhere. When you land, you go to another airport terminal. And then you get in an automobile or a bus or whatever you get on for transport. And then you go places. You might go to a restaurant. You might stay in a hotel. You may go to a resort. And all of that activity. And a cruise is a city at sea. And so to compare us just to an airplane ride is inappropriate. And to compare us just to a hotel stay is inappropriate. And so I think the reality is, look at the evidence. There's over 400,000 people that have sailed to date in Europe. Fewer than 50 cases of COVID, all handled seamlessly without disruption.
No
and
problems
no
at
major
all?
outbreaks.
Nope, nothing, because I know you've got, sailing in Europe with 2 of your brands and I think 6 of your 9.
Less than 50 cases.
Yeah.
Less than 50 cases out of the estimated 400,000 folks. And each was handled seamlessly because arrangements, were prearranged with the port and people's travel weren't disrupted because now there's a lot more understanding. That all happened before vaccines. And so now we have the vaccines, which are another layer and a major layer. And we would encourage everyone to get vaccinated. I mean, that's what we would encourage people to do because it is one of the best, levels of protection against any serious effects from COVID that you can have. And that's what the science says. And we'll continue to be informed by the science, by global medical experts, but we will respect whatever the rules are wherever we go, as we always do. We have to be in compliance.
What do you think about making it mandatory for vaccines for passengers as well as for crew members? You and I have talked about this before. So far, you guys have said no. I know you said you highly recommend them, but what about making them mandatory?
Absolutely.
Norwegian is doing it. What's your take here?
Well, first of all, we encourage them. Look, the reality today is vaccines are not accessible to everyone. Young people, children, today, vaccines are not recommended for children. And so there's gaps in the vaccine protocol today. There are tests underway. Maybe in a few months, it'll be fine to vaccinate children. Maybe in a few months, there'll be plenty of vaccine available for everyone. Everyone's hoping for that. Everyone's assuming that. And if that comes to pass, we would encourage everyone to be vaccinated. Whether we mandate or not, we have to find, in some places it's illegal to mandate, et cetera. I understand personal choice and personal liberty. We respect all of that. And so we'll follow what the regulations are, wherever it is. But we too want to stand and do the thing that's in the best interest of public health. However, if vaccines are not mandated for other forms of travel and tourism, et cetera, then we're not sure that it makes sense to mandate them, for cruise either. But again, we'll comply. But we think, fair and level treatment, serving the best interests of public health is what we should be about. Today, we just want to continue to discuss with CDC and the administration and find a way forward where hopefully we can be sailing again this summer here in the U.S.
What's going to change on a boat? If I get on a ship, I've been on one of your ships, or Charlie Pellet has been on many of your ships. What's it going to be like when it comes to the buffet? Is it going to be temperature checks a lot? What will you guys do? What will be different?
Well, it depends. So right now, with the sailings we've had so far, we've had universal testing. We've had physical distancing. We've had mask wearing. We've had additional medical screenings. We, of course, have enhanced sanitation, enhanced hair handling stuff on the ships. So all of that is present, and it's worked well. going forward with vaccines, we'll have to see what makes the most sense in protocols, whether all that layering on top of vaccines makes sense, whether it could be, for example, as was announced by CDC, with regards to everyone vaccinated in a group, you may not need to wear the mask if everyone is vaccinated, as frequently and so on. So we'll figure all that out, and that will evolve over the coming weeks. How we'll figure it out, we'll listen to the medical experts and the globe and the scientists from around the world, what the best practice is and the best interest of public health. And of course, we will follow whatever the rules are wherever we go.
Will it be, so could it be very different what the rules are in the U.S. versus over in Europe, or will there be consistent rules for all of your ships?
I think for a short period of time, there could be some differences, and not just U.S. and Europe, but even within Europe, even within the Caribbean. Over time, everyone will get to a more probably homogeneous kind of range, but we are prepared that there could be differences in one locale versus another, as everyone is dealing with it. The spread is different in one locale versus another. The risk is different, and so we understand there could be some differences.
So talk to us about the business update today, Arnold. Your stock popped on the news and did finish off its highs, but nonetheless definitely caught the attention of investors along with the CDC news. Summer of 2021, I know you gave some of an update on that. Talk to us a little bit more about what you expect, how it plays out here.
Well, again, we're optimistic that sometime during the summer of 21, hopefully in July, we will be able to begin sailings from the U.S., but we already will be sailing from multiple places around the world. Again, a limited basis, a few ships. The reintroduction is going to be staggered. Initially, we'll have relatively low occupancy by design, so our crew gets used to the protocols that have to be in place, as we did in the past few months with the sailings that have already started with AIDA and Costa. And so that's where it begins. And I think over time, in a few months' time, if things continue on the trajectory they are with regards to the global management of this pandemic, then we might be able to see more ships, maybe the entire fleet, and higher occupancy on the ships as our crew, gets used to managing the new protocols.
I am also curious about
right now.
Oh, sorry, go ahead,
people
please.
Love the experiences. Carol, people love the experiences that we had on in the sailings we've had so far over in Europe. It's the highest net promoter scores, which is one of the indicators we use for guest satisfaction that we've ever had. And so, we can give people a great cruise experience, even with enhanced protocols. And keep in mind, we've had to deal with things in the past. There's Ebola, Zika, MERS, SARS, all these different viruses. We sail globally around the world, and we've had to deal with things. Now, this one is definitely, obviously it shut the whole world down, so it's a different thing. But we've learned a lot. And science has come a long way in the vaccines and everything, so we're in much better shape today than we were months ago.
Well, I wanted to ask you a little bit more about Europe and Costa. You guys do a big business over there with that brand. Are bookings continuing to tick higher? What are you seeing in terms of trends?
Well, as we said on our earnings call today, our business update call today, in the UK, we announced 3 brands with sailings in July in the UK: Cunard, P&O, and Princess. In each case, Princess had its highest single-day booking when we announced second highest ever in bookings in a given day. P&O, had their highest in like 7 years, and Cunard had its highest in many years, in a decade or so. So there's clearly pent-up demand, and people want to cruise. There's a lot of repeat cruisers who have missed out almost on a full year of getting their cruise fix, and they're anxious to cruise. And people are anxious just to get out, period, of course, after the lockdowns and everything. So the demand is strong and robust, and we're able to make those announcements in the UK, knowing we're going to sail in a way that serves the interests of public health. Similarly, you asked about Costa in particular and then AIDA, and we see good demand. One of the challenges for Costa and AIDA is, particularly Costa, is that mainly you're sailing around. It's Italians today sailing around Italy, around Italian ports, and so that's not the most desirable itineraries for the mass of continental Europeans, but it's still a great itinerary, and people are enjoying it.
And in terms of, as we've seen the vaccines becoming much more widespread here in the United States, I know you gave an update in terms of bookings in the U.S. What's been that uptick? Have you seen kind of a direct correlation, Arnold, as more and more people are getting vaccines, that people are signing up in terms of bookings for trips on your ships?
Carol, our bookings have been robust throughout. When we look into the 22, second half of 22 and into 23, even the first half of 22, we're well ahead in the upper end of the range of historical ranges for bookings at this point in time. And with strong pricing, still a fantastic value for people relative to equivalent land-based vacation. But pricing has been good. And so we haven't seen any enhancement to that because of vaccines or anything, but it was pretty strong to begin with, and it has continued to be strong.
And vaccine passports, I think you and I have talked about this. Not something that do you think it's a good idea?
Yeah. Look, I think, the personal liberty issues and all that, I leave to people with a higher pay grade than I have. But I would say that I think, people getting the vaccine is important. I would encourage everyone to get a vaccine. And that I would absolutely say is important. In terms of the personal rights and disclosure issues, we've all traveled where we had to show we had a particular immunization in our country and that sort of thing. And so we'll see how all that plays out. But the world will come together on that and make a decision. And we'll take advantage of that. Whatever they decide, we'll comply and make sure our guests are honoring that if we take them anywhere. But I think the most important thing is that people do get vaccinated if they have access